We believe these founders and leaders represent India's best investments. India has been built on the shoulders of these founders who set out to make a change. These businesses have redefined India, or rather, these investments that are synonymous with the India portfolio. This summit brings to you their stories in an unfiltered take to inspire the next generation of entrepreneurs.
The summit would trace the journey of India's business landscape with an exciting three-era narrative: inception, ignition, and inflection. We begin with era 1, inception.
We believe these
Set
founders
right in the
and leaders
backdrop of
represent
post-independence
India's
India,
best
which is
investments.
chaotic, both
India has been
politically
built on the
and from an
shoulders of these
economic
founders
perspective.
who set out
The
to
India
make a
portfolio
change.
seeks to assess
These
this
businesses have
era
redefined
with
India,
reference to the numerous archaic policies that existed, and yet how various businesses managed to find a
or
strong
rather,
foothold and a
these
niche for
investments
themselves.
that are synonymous in era 2 India ignition. We look This past summit the dawn of their stories in an unfiltered India saw the
take
rise of founders
to
inspire
relate
the
to
next
the
Indian consumer on the back of increased purchasing power among people and the influx of
The
various new
summit would trace
technologies.
the journey of
But
India's
this era was replete with its
business
own
landscape with an
contradictions and
exciting
ironies
three-era narrative:
that often came to bite
inception,
startups
ignition,
navigating
and
their way
inflection.
through red tapeism,
We begin with era
corruption,
1,
and a
inception.
market yet to understand.
Set right in the
and leaders
backdrop of
represent
We end with era 3, inflection. The
India's
period
best
when the Indian
investments.
startup ecosystem, both
India has been
politically
built on the
and from an
shoulders of these
economic
founders.
perspective. With the democratization of data and the last mile delivery of services, this era is marked by new age businesses going public and venture funding reaching a new high. It's only upward for Indian businesses from here.
Over the next 2 days, our esteemed lineup of speakers will touch upon these major landmarks in the Indian startup ecosystem and will introduce to the world their unique assortments of tales of successes and failures through one-on-one fireside chats, open to all AMA sessions, and engaging panel discussions. Today, we have various sessions, including internet-first companies, a session with India's first unicorn, InMobi, along with a session titled India's Gaming Dream with Nazara Technologies, the Dotcom Decade, and our last panel for the day is titled Through the Eyes of a Venture Capital Firm. This panel recognizes the contribution of founders and various stakeholders in the startup ecosystem.
These sessions cover the creation and growth of various niches and markets in the ecosystem over the last 4 decades and aims to help current and aspiring founders learn how to build on these niches and ideate game-changing solutions.
An introduction to our team. We are the organizing team of Conquest, India's largest student-run startup accelerator. We are a group of motivated students who constantly strive to facilitate startups in navigating the challenging startup ecosystem. Over the past 3 years alone, we have catered to 5,500 startups while offering a wealth of resources and networking opportunities. And to the top 10 startups in our cohort, we give them the unique opportunity to pitch their idea to a decorated jury of industry experts, venture capital firms, media houses, ecosystem stalwarts in an effort to win our equity-less cash prize.
Pulling off an event like this requires incredible amounts of effort and dedication from all the stakeholders involved. And none of this would have been possible without the help of everyone that chose to invest their efforts into the India portfolio. As part of the Conquest team, we'd like to thank everyone who helped make this event the success that it is. So a huge thank you to our incredible speakers, brilliant moderators, invaluable partners, and the faculty and staff of our esteemed university, BITS Pilani. We'd now like to call upon our CEOs, Utkarsh Chaudhary and Dhruv Faria, to say a few words.
Hello, everyone. Greetings from CL BITS Pilani. It gives me immense pleasure to welcome you all to the India Portfolio Summit organized by Conquest. To give you some context, Conquest is India's first and largest student-run accelerator with the motive of encouraging and facilitating the entrepreneurial spirit pan-India. This is the 18th edition of Conquest, which has evolved over the last 18 years from a on-campus B-Plan competition to a startup launchpad organized in Delhi, eventually to a full-fledged startup accelerator with the finale week culminating in Bangalore. Utkarsh will shed some more light on the India portfolio.
This is Utkarsh Chaudhary. I'm currently a third-year student at BITS Pilani, and this year I'm leading the 18th edition of Conquest. And along with all the things Faria mentioned, this year we are starting up with a new model that we're going to continue for the next editions, which is a summit. So this year we began with the narrative, and the narrative was to trace the journey of India's business ecosystem It was a very random idea given by a first year junior. He's a dear junior of mine and he's working on this summit greatly, Madhav. And his idea and the consensus was that the narrative is really worthy and we should definitely build on it. So at first there was just an idea, and we all began to brainstorm on it. We started to refine the narrative, and in the beginning we had no structure in mind about how we'd get this narrative out, what speakers do we call, what format do we deliver this. But we first thought of interviews, podcast, and many various other formats. But then the team sat and decided on a consensus that the value of narrative only lies in the continuation of it, and anything spaced out just won't do justice to what all we have worked on. That's why we divided the last 4 decades of India's business ecosystem into 3 eras, and then started to work on more refining it. Started to research on each era. Started to see what specific events and anecdotes defined these eras, and that's how through different anecdotes we build eras, and through eras we build a great narrative. And as we solidified the narrative, the next big mammoth task in ahead of us was to look for folks who can best deliver their thoughts, and they know what exactly happened, they know the nuances in that period. And we tried to look for people behind companies that people know, but the founders and folks they don't. And in this manner, we try to cover the ecosystem from its beginning to the latest innovation we can find. And we finalize the people who are the best ones to speak on these things. And logistics of organizing this summit and getting speakers on board and finding, shortlisting, mailing, and getting connections out is something that I won't even talk about. That's not so. The narrative is important, and the speakers you've gotten here is important. So this is how it all started, and the team's been phenomenal all this time. We are I in my like I haven't seen a team working with this ethic in BITS Pilani in other colleges, and not even the last 2 editions of Conquest I've looked at as a first year right and a second year right. So now I'll hand it over to Faria to discuss upon what all new things Conquest has planned and what all do we have for the founders, and then on to the summit speakers. Thanks a lot.
As we progress with Conquest 2022, the registration period will be closing on 14th of June. We will, we will later be entering into the mentoring phase, where the top startups will be mentored by a pool of 100 plus mentors. This will be the top 30 phase. During this top 30 phase, the mentors will be evaluating the startups based on a few criteria, like the USP, the market, the team, etc. And further will be marking them to help us in shortlisting the top 15 startups. The top 15 startups will then go through a mentorship period, which will be a more in-depth engagement on topics like team building, fundraising and its allocation, product market fit. Post this, we will be shortlisting the top 10 candidates who will be flying down to Bangalore for the finale week. During this week, we will be having investor meetups and P2P sessions from which our cohort can derive maximum value. This will then culminate to our demo day, which will be happening on the 21st of August in Bangalore, which will be graced by several angels, stalwarts from the ecosystem, and a panel comprising of experts from our investment partners, our VC partners, and media houses. I think it is before we start with the summit, it is very important to give credit where it's due. The Conquest team. Conquest has been running for the past 18 years, and each year the team has built over the base of their predecessors. And pulling off a summit within a month is nothing short of a colossal feat. It gives me great pleasure to work with such a dedicated team. It is basically a bunch of first and second years who've taken the initiative of conceptualizing, materializing, and bringing to life this entire summit, and with what finesse. The idea of this summit and the quality of the speakers is a testament to their hard work, their hustle, and their consistent efforts that they've been putting in. I think that's all from my.
Secondly, at last, as students, we definitely miss out on nuances. We have fewer connects in the ecosystem, and there have been folks who have been like crucial to building this summit. And without their support, without their help, it will all never be possible. Naman from Your Story, Jivraj from Angel List and India Silicon Valley podcast, Gaurav Mandlecha, Rahul Seth, all these people have brought in all their thoughts and they have guided us through this journey. And the team's been very active to like extract whatever they can from these great people. And yeah, I think with this note, we can definitely start on the summit to hearing some like more great folks.
Stories. Thank you.
Thanks a lot.
looking forward to the next 2 days with a clear objective in mind: to discover the past, understand the present, and ideate upon the future. Presenting our first panel of the day, Internet First Companies, with Mr. Ajit Balakrishnan and Mr. K Vaitheeswaran.
The consumerization of the internet has been one of the biggest inflection points in the history of the planet, changing the way that people work and communicate. Ideas such as platforms to network, buy, and browse the internet's vast repository and online marketplaces have redefined the trajectory of the world. These are ideas that came up in India at a very similar time as their Western counterparts, and a testament to the fact that Indian founders noticed and built on the incredible potential that the internet held. Our first panel of the day, titled Internet First Companies, seeks to trace the growth of the Indian internet space with some of the pioneers of this industry.
Introducing our first member of this panel, we have Mr. Ajit Balakrishnan, founder, chairman, and CEO of one of India's first and largest web portals, Rediff.com. Mr. Balakrishnan understands the growth of the internet space like no other. As a member of the Ministry of Human Resource Development, Mr. Ajit chaired the Committee on Education and Entrepreneurship with the National Education Policy. We look forward to hearing your insights on the topic.
Our next panelist is K Vaitheeswaran. Widely hailed as the father of e-commerce in India, Mr. Vaitheeswaran was the founder and CEO of Indiaplaza.com, India's first online shopping platform. Mr. Vaitheeswaran has advised global brands, including Deloitte and Tata, and has served on the advisory board of several startups. A popular speaker on entrepreneurship in various forums, Mr. Vaitheeswaran closes out our panel for Internet First Companies. Over to you, sir.
Okay, turn down the audio as well. You can hear me now?
Yeah, I can hear you. Am I audible?
Absolutely. Where are you now, Madhi? Are you in Chennai or where are you?
Bangalore. I'm in Bangalore.
Bangalore.
You know, I'm doing another startup for the last few years on beverages.
Yeah? Wow. On beverages?
Yeah.
Wow.
So, good evening, ladies and gentlemen. We're really glad to host Mr. Vaitheeswaran and Mr. Balakrishnan here today. And today, with this panel discussion, we aim to chronicle the journey of both of these great entrepreneurs and cover their initial ideas, the roadblocks they face, understand their opinions of the ecosystem and how it's changed over the years. So let's break down and jump into the first question. So I'd like to ask this to you, Mr. Balakrishnan. Unlike today, with Reliance Jio democratizing the internet usage in India, in the 1990s and early 2000s, India had barely any internet users. So apart from the low internet penetration in the country due to underdeveloped infrastructure or lack thereof, what else do you think are the possible reasons for the country's resistance to adopting the internet and using, services on the internet?
I think in a sense, if you analyze most tech markets in India, we always claim we are a 1 billion population country, etc. But people who adopt tech in this country is actually very, very small. You can count, you can count in the order of magnitudes. Active users are maybe 40 million, 70 million, 80 million. So I think part of it is the economic situation. Not many people can, at that time, even today, afford a laptop. Coming up, the mobile phone has made a big difference, very big difference. Okay, so I think the challenges are many. It is not just in internet markets. In most markets in India, the challenge is both of very small users who adopt new technology, and also very few people on repeat buying. So I think so it has to be heavily subsidized. You can see that India's e-commerce companies are kind of losing mind-boggling amount. Each of them are losing 10,000 crores and 20,000 crores, things of that kind. I mean, I can't even rub my eyes. Am I getting defective in eyesight? I'm seeing more zeros when I should not be seeing zeros. So I think that's a challenge exists. India, in spite of all our bragging and everything, is relatively still a poor country. That's a problem. But things are changing fast. The availability of cheap mobile phones and the availability of very, very cheap internet access, particularly in the last 5-7 years, is going to make a difference. Okay. So,
all right. So on that note, Mr. Vaitheeswaran, I'd like your opinions on this as well as we'd like to understand the resistance that Indians faced while using an e-commerce platform and how Indiaplaza managed to, deal with that roadblock to scale up.
Okay, so first let me talk about the same thing that Ajit was mentioning. Okay. I think if you look at the numbers, when we started in 99, there were probably less than 3 million people using the internet in India. And as far as people who were shopping online, that number is certainly less than 20,000 people. And almost all of them just shopped on one site called Amazon.com. So it was just the early days. And, the real challenge for us was, in retrospect, I think it was the fact that, many reasons that Ajit was mentioning, the fact that we were probably a decade earlier. But the unfortunate thing is, none of us knew about this when we started. The reality is if we knew that we were 10 years ahead, we would start 10 years late, right? It's a fairly simple solution. But you start making some assumption. It's only when you're way down, you realize that you're actually traveling alone and there's nobody else. And the other reason, the other big blockade that we feel specifically for e-commerce, and I'm sure Rediff had its own separate set of challenges for content access. But as far as commerce is concerned, I think we were trying to do something that had never happened before. We had all grown up with a very healthy skepticism and suspicion of the shopkeeper, right? All of us grew up in an environment where we expect the shopkeeper's job is to take the consumer for a ride. And here we are trying to build a trust, telling people shop online and we'll take care of returns and we'll get a product, pay us in advance. And I think it took a whole lot of time to break. I mean, it was a habit breaking thing. It was a mental block. I mean, the excuses were, less number of internet people, less number of credit cards. But to me, the biggest block that we faced is the fact that fundamentally Indians were suspicious of shopkeepers. And it takes a long time to break that suspicion, which is obviously a decade or a generation or more. So that was a real blockade.
All right. So moving on to the next question. So to build an internet-centric company in an era where a minuscule population of India was using the internet is quite a brave move and quite a commendable effort. So what do you think the people in India, how are they different back then, and how has the average user changed today? And today, why is it easier to overcome these roadblocks that you all have just mentioned?
Oh, let me try and think that up. I don't think India is much different from other countries. I think we keep our eyes and ears open to seeing what's going on in the United States, which probably is a little exception to most countries. But in the United States, they have a standard of living far, far ahead of what we have. Secondly, and this is very important, practically every major internet success in the United States have had initial funding from the Department of Defense. Okay, if you read the research paper of the original two Google founders, at the front page, they always had a thing, thank you Defense DARPA, Defense Advanced Research Project thing, for having funded this paper. Even the Google paper on how to search was funded by them. Now, that is something noticeably missing in most countries. I mean, even the Europeans don't have a state defense supporting their supporting the tech innovation to the extent that the United States has. So I think that is the biggest missing thing, because if you study technology market evolution, as I've been spending many hours doing, in the first, when a new innovation appears, the early adopters are very few. So you need somebody to fund and see you through the first 3, 4, 5, 6 years, and without the entrepreneur losing control. So in the United States, you can go and pitch it to the Defense Department, and if you have a convincing enough pitch, they will fund you. For example, I think in this current rush, there are 2 or 3 big movements happening right now as we speak. One, of course, is the move towards cloud services. It's a huge movement where the PC is about to vanish from the desktops in the next 2, 3, 4 years. Movement to the cloud. And in the middle of all this, about 3 years ago, the Defense Department gave Amazon I think a 10 to 15 billion dollar order to build a cloud system for the defense. So those kind of military orders are what subsidizes, the early adoption. So it is not just the consumer which is lacking. The consumers will be skeptical always in every country. So I think we should not blame Indian consumers for the problem that we always face. But I think it's a defense group. And I have in my time gone into, I founded Rediff.com in 1995, the days of yore, 2 to 3 years before Google was founded, incidentally. And many years before Facebook, I think Zuckerberg was in probably high school when I founded Rediff.com. I'm pretty sure about it. Now, but I think our defense is, most of our senior defense officers are arts graduates. They don't understand. We've made innumerable pitches to see, look, give us an initial order, etc. They understand everything, but they don't give it. So I think the key element in India is, I think, not enough initial defense orders, which is what America has, which no other country has, but Americans have it. And virtually every major breakthrough in the United States has come, including the internet itself. The internet itself, TCP, IP, and related things, were part of the Defense Department efforts. So please remember that.
So, Mr. Vaitheeswaran, can we get your opinions on the same?
Yeah, so, my view is that the key changes that are there from a consumer point of view is, well, the first big thing is exactly like Ajit was mentioning, you need capital support to help any new innovation to become popular. You want millions of people to actually try and create a habit. And during those early years, you need sustenance. One way of that is to, like he was mentioning, get a series of corporate support or defense support, which doesn't exist in India. The other is to provide capital support. Now, the good thing is, if you look at internet companies and the modern age startups today have significant capital support, but that was also not available for us. In other words, not only were we focusing on trying to change consumer habits and do something that's never been done before, we also had to have the wherewithal to keep the business going financially. And it's also a matter of timing. So, for example, when we started in 99, uh, within 2 months, we were caught in what is now called the dot-com boom, where everybody got significantly funded. But the difference between the dot-com boom and the bust in India, as far as the US is concerned, in US, the difference between the boom and the bust was fairly long period. I mean, it allowed several companies, the Amazons of the world in those days, to build something. In our case, specifically in our case, we launched in September 99, and the dot-com bust happened in April 2000, which means in less than 6 months, right, we moved from huge highs to massive lows. And within that period, we had to find ways of building a new business, innovate, change customer habits, and also get the capital support. So obviously, it's at some stage you look back and realize that we were really fighting with our backs against the wall from a timing point of view. I think that's the big change today. If you start something and you have with the right background and all of that, you raising capital, and I'm talking serious capital, millions and millions of dollars are not very difficult to raise today, and allows you to do it. What they do with the capital, and whether they do it sensibly or wisely or end up losing several thousand crores like Ajit was mentioning, full of zeros, that's a separate issue. But the fact of the matter is the capital support in itself is available, which was not there. And that's the real challenge that, when I look back, I think was something that held us back.
So, Mr. Balakrishnan, how did the dot-com bubble affect Rediff.com as well? And how did you all deal with the sudden drop in the market?
Well, what actually the thing was, I'd say fortunately, unfortunately, we were already trading on NASDAQ when that thing happened. Okay. It's another story how we got to trade on NASDAQ, but that I'll tell you. When it collapsed, everything was new because, I thought I was a very bright guy and I knew lots of things. Very few people at that time in India understood what the NASDAQ was. So I even physically moved to New York City to get to know the ways of the local natives. And that was quite educative, because in America, particularly in New York City, Wall Street is a kind of a culture like in India, Swamijis and things are, in India, saffron-clad Swamijis are respected. Similarly, in America, I think jacket-wearing and tie-wearing Wall Street fellas are like semi-gods. Really, you should see. And my wife and I were living in Union Square, so in the evening, sitting at a bar, we encounter all of them. And I could almost, like an anthropologist, try and figure out what's really going on here. So we passed through that thing because we were careful. The capital we had raised, we hoarded, and I refused to spend it. As all our VCs were saying, Ajit, spend, spend on advertising, make sure that you grow. I told them, kiddos, I've been through 3 or 4 recessions in my life. When these things happen, what you do is sit quietly in your office, make sure that people are well looked after, make sure all the algorithms you need for the next boom are getting ready, and don't spend money. So that's how we managed to conserve our capital. It came through that, the first dot-com bust. But I think, if at the risk of diverting the conversation, when we started, there was no internet users. We were the first website. Most people know that. Then we encountered the first boom, which is when mobile phones appeared. That in a fundamental way, it spread the internet and changed the way the game was played. And now there's a third thing, boom, technological wave about to burst open. That is a metaverse boom. So that is all going to have an even bigger impact on startups. So all of you kids who are about to do a startup, better master blockchain. The blockchain is the core. The new revolution, blockchain is even more of a revolution than TCP/IP. And it is not, people are getting distracted by that little accident which got created out of blockchain, where all the digital currencies, those are not important. Blockchain as a decentralized mode of behavior is going to change the world in an unrecognizable way. So that's as big as TCP/IP where it's not getting enough attention in India, and I'm working on it. I think I managed to do by blockchain coding in Python. I have personally mastered, and I'm teaching it to all the kids who join us. So I think there are these big technological changes which come, and it comes creeping on. You don't realize. But 9 out of 10 people, you ask them what is blockchain, they think it is cryptocurrencies, which is not. Cryptocurrency is one implementation of blockchain, but blockchain is going to destroy some centralized control. When the Industrial Revolution first brought technology, they all had things like factories and big banks. It's all centrally controlled to get efficiencies of scale, economies of scale. The blockchain has come with the revolution of a decentralized method of working. So that is going to be a mega revolution coming up. Okay. Sorry to distract the conversation. Yeah. Oh, Pranit has lost his connection.
Yeah, he's lost his connection.
I hope the rest of the gang are inside. Yeah. Oops.
Hopefully he'll come back now. Yeah, we'll wait.
We'll wait.
So to move on to the next question, while the blockchain is an interesting concept, many Indians today fail to even comprehend how the internet works. So on that note, let's ask another question. There is still a huge divide between an offline and online consumers. And in a country like India, people do find it hard to digest of the internet. They don't feel they can rely on buying something from a person they haven't seen before physically. So for the same reason, many consumers are not willing to ship online. So do you agree, or do you think that customers will flock when they see value, be it online or on an offline platform?
Vaithi, you want to
go? Sure. So, one of the reasons why significant amount of customers have shifted, at least a part of their shopping, if not most of their shopping online, millions of them over the last decade or so, has been primarily the commercial value. Let me give you an example. When one of the stores that we built in FabMart in those days was books. We had millions of books. And we tried to offer a proposition to the consumer saying, look, if you go to an offline bookstore, you'll get maybe 50,000 books. But you come online on our site, you'll get 5 million books, right? So the order of magnitude was different. So if you come, you get great selection, buy from us. But it didn't cut much ice. And, when you think back, you realize, who the hell's got the time to browse through 5 million titles anyway, right? Then we said, look, if you go offline, you go to a physical store, the store has a closing time. They start at 10 a.m. in the morning, they close at 8 p.m. Whereas, we are available 24 hours. So you could actually buy books from us, browse from a large selection at 2 a.m. in the morning. And I remember talking about these two things. And, sometimes talking to people, consumers, open up your eyes. So I remember focusing on these 2 points. I was addressing some students at IIM Bangalore. And one lady got up and said, well, why the hell would I shop from you at 2 a.m. in the morning? Because I'll be sleeping, right? And it's such an important fact. The reality is the biggest propositions of the internet shopping in those days, which is great selection and 24-hour shop opening, is really of no value to a consumer, right? Sure, it helps, but it's not the be all and end all. You can shop within a certain time. You can buy from 50,000 books is more than enough for you to buy and shop 5 million, for most people at least. But when there is enough capital available supporting a similar thing, and you say, any book you buy from me and I'll give you 50% off, now that is a tangible benefit, right? Because it's a tangible benefit, and suddenly people are saying, look, I'm getting a book at half the price. What's not to like? And that's what brings a whole lot. The book is just an example, but the same thing, you're looking at groceries, you're looking at apparel, you're looking at electronics. The fact of the matter is a commercial discount, which is value, has been the biggest single reason to drive millions of people onto online. My counterpoint to this is that in the event that internet e-commerce companies had not offered deep discounts, even today, I think the number of people who would have shifted online would be a much smaller number.
Okay, so Mr. Balakrishnan, on a similar note, what was the dynamic in Rediff? And do you agree that you feel that Indian consumers will flock when they see an opportunity or they see value, whether it be offline or online?
Okay, first of all, our own business model we have had to evolve and change over time. Most people, none of you may not know this, but right now our revenue is 85%, if not 90%, coming from enterprise email services. For example, you get a mail from HDFC Life that is powered by us. So we have about 28,000 enterprise customers like HDFC Life. And we set up a system where they can point and click and get up their own email system with 30,000 email users in their own bank, apart from others. So most of our battles today, we have a 20 or 25% share in India of the enterprise email market. We have a news site which people come and read news, but that's not a source of revenue. That's things we're doing for fun mostly. Our real business is enterprise email. And we also have free Rediff mail, but that's another story. So I think today what we are seeing is we are competing in that market with Microsoft and Google. You don't need two bigger guys to compete with. But I'm enjoying it. It's fun. I think each time to win a big account, I pat our kids on the back and they see. It is like scoring a goal against Brazil in the World Cup. It's like that. So I think we have fun. So I think we're enjoying that. I think, of course, technologically you have to be very, very adept because things like security and spam control and things, every day the technology on that is going by leaps and bounds. But I think if you see a goal of your business it's like a game like football, having fun, having things and compete against big teams and win. That's how I view it. I don't see it as a way of creating wealth to leave to my others and so on. In the process, you earn wealth, it's good. But it's like a nice intellectual game where you can compete every day. And each time a competitor springs a new product feature, you don't die. You say, oh God, come on, let's go and beat that tomorrow. So that's the approach to entrepreneurship, which may not be the same for everybody. And for many, it is a question of building wealth and leaving it to their sons and daughters. I don't have kids, and even if I did, I wouldn't give them 1 rupee. I'd tell them, go earn for yourself, kiddos. So I think it depends on what the goal is that you're setting out to be an entrepreneur for. Obviously, when you're in college like you kids are, it's not easy to discover life goals. They occur to you along the way. But rest assured that the real entrepreneurs don't do it to create wealth for their family or wealth for their shareholders. The Wall Street and the financial types have created what is called the shareholder value maximization theory. They believe that the goal of every business is to maximize the wealth of its shareholders. I think that is all crap. That's not true. The goal of every business is to serve the citizens of that country or any other country with services to make their lives a little easier than what it is normally. That is the goal of every business. In the process, you earn, hopefully, enough margins to make sure that your people are paid in time and you have enough reserves for bad times which come. But I think one thought I'd like to leave with you guys in college is don't be an entrepreneur who wants to maximize shareholder benefits. Okay. It's a kind of a 15th century philosophy. Yeah? Okay.
So, Mr. Vaitheeswaran, on a similar note, while Mr. Balakrishnan is right that with the growth of the startup culture in India, there is a chase to become a unicorn, to draw the country's attention. So companies with bloated valuations and weak fundamentals are running blindly in the rat race. So how do you think this has changed over the years? More ventures in India back in the early 2000s operating with a much higher sense of purpose than startups today. And what do you believe rather is the larger purpose of entrepreneurship?
You're asking two very different questions together. So, I'm going to separate them because to me, an entrepreneur fundamentally is somebody who has the DNA of solving problems. And finding solutions to the problems are exactly like what Ajit said. The solutions to those problems must be such that they make a consumer or a citizen of this country's lives better, right? So that's the fundamental. I mean, there's no dispute about it. It so happens that some of those problems consumers are aware of, and you go solve them. Some of those problems they're not aware of, but they're still problems, and you locate them, so you go solve them. So I think that's a broad thing. And because that's the DNA of the entrepreneur, no, I'm not a big fan of what people call domain knowledge, right? I mean, so for example, we did an e-commerce startup in 99 and I was clueless about the word e-commerce. I didn't even know if there was a hyphen after E when we started e-commerce. That was how new it was. Now, 20 years later, I'm doing a startup. I'm doing FMCG. I'm doing beverages. I've never been in FMCG in my life. I've never been in beverages, food and beverages in my life. But we created a product that in 3 years has a patent. It's the only patented beverage available in the market. Now, both those things are pioneering innovative ventures simply because as an entrepreneur, you're trying to solve a problem, right? And the fact that we didn't know anything about e-commerce or didn't know anything about FMCG is not holding an entrepreneur back, right? So that's the key point. Now, as far as a unicorn is concerned, that's a totally different thing because a unicorn and becoming a unicorn, creating values which have, differentiate. I think many of these entrepreneurs are not able to differentiate between value creation and valuation creation. So they created significant valuation, but there's not much value. The word that Ajit used is a very critical word in business, margins, right? If you're not able to deliver margins every time you make a transaction with a consumer, you're not creating enough value. And if you do that for a positive, over time you'll figure out a way of building a business that is sustainable. But if the margins itself are negative or very close to negative, you're not creating value, in which case you're forever dependent on somebody funding, providing value, providing the capital support, leading to what is called unicorns. But you've seen just in the space of 8 weeks, 100 unicorns are now less than 30, right? Which means 70 unicorns are no longer unicorns, right? So the fact of the matter is that if in 8 weeks it can drop from 100 to below 30, it essentially shows that 8 weeks back they really had no value. And to me, I'm not a big fan. I'm a big fan of startups creating value. I'm not a big fan of startups creating inflated valuations. So valuations are great, but it must be sustainable, profitable business. To me, if I look back the last 20, 30, 40 years, which would be a great company, I look back at a company like Infosys and say, look, they truly created value, right? Truly created value. They went into an area, they did an IPO, and they continue to create value, right? Now, whereas if you look back in the last 10 years, which is a great startup that has created value, I mean, hardly anything comes to your mind, right? In terms of somebody who's got sustained business model, somebody that seriously makes money, right? That's what the sad thing is many of the startups have already spent billions of dollars, several $100 million have gone into a business that continues to bleed money. In my view, they're simply badly run businesses. I mean, there's no other word for it. They're just badly run businesses.
So this is quite an interesting topic, and Mr. Balakrishnan, I'd like to get your take on this in more detail as well on what the state of the startup culture is today on value creation, and as Mr. Vaitheeswaran said, valuation creation. So what do you think the dynamic is like today, and what was it like before?
I'll tell you one of the important things in the demographics in India when you start a business. Back in the late 80s, I was in Bangalore and together with Nandan and Narayanamurthy, we were all startups at that time. I was part of a company called PSI Data Systems, which was co-founded by myself and two Stanford computer science graduates of that time, both Indians. So in almost all of Bangalore, we were all huddling there making personal computers, which was a big and PDP-11 equivalent servers, hardware. We were coding, building the circuit board, getting the software done, etc. But we couldn't make any progress, all of us. So what happened suddenly, the Y2K phenomena appeared. Y2K suddenly when, the year 2000 came, all over America and Europe, they had to change code by, had to be hand changed into new digits. So then all of them jumped. I refused to do that jumping, but what they wanted as foreign companies wanted you to hire Indian programmers, put them on your payroll, train them how to recode Y2K, and post them in their locations in America. That was the start of body shopping, and thank God, I think Nandan and Murthy and others jumped at it, and they did that. So all of the entire Indian tech industry became one of what I would look back and say called body shopping. Hire people, train them, and post them at their customers' enterprises in the United States physically. You pay them 5,000 or 10,000 rupees a month, but you charge your customer $10,000 a month. That was your margin. Okay, so that's how the Indian IT industry grew, and all these companies that all of you respect and invest in this tech market, you can see virtually 90% of them are what are called IT services companies, quote within brackets, body shoppers. Okay, all innovation has gone from here. Okay, they'll never discuss it openly. But that is the nature of India, because the price difference between what foreign customers will pay you and what Indian customers are willing to pay you is massive. Even today, for example, we have about 20 million people visiting us every month, and of which 2, 3, 4 million people come to read news. But if an American NRI clicks on it, the price you get for that click is about 6 times what you get for an Indian clicks on it. Okay, so the result that our team is always saying, sir, let us go and get more American users, more American users. So the relative purchasing power of India is, so low, so low. So that is an important thing. Anything that you do, you suddenly realize that Americans or the Europeans will pay 5 or 6 times the price. So you don't have an incentive to do anything here if you're looking for money only. And Ajit, just one more word. I know you're running short of time. But the other part is when VCs, practically all of them I know all the time that I tell them I'm half an anthropologist, and, who wants to research, unknown tribes and all that stuff. Then you guys, VCs are like an unknown tribe to me. So I'll come to your island and then learn what you're going to do. All of them, their goal is to put some money into a so-called startup, and within 3 or 4 years, flip it by selling it to some American company which wants to enter India. So there's funding, VC funding efforts, an indirect way of entry into India. Take, for example, Walmart. They couldn't enter India. People fought against them. So they paid a gigantic price and acquired Flipkart and jumped into India. So many of the VC efforts are indirect efforts by the American capital group to enter India. This is true for Amazon. If you see Amazon's key supplier, I guess you guys know who that is, right? Yeah, I dare not say it in an open meeting. Go check whose main supplier it is. You'll find out. Yeah? So I think it's nature. It's called the political economy of entrepreneurship. In India, we don't get early support from defense to tech-oriented companies, and the market prices that you get for your product is 10 times outside India than in India. So that we have to live with. But at the same time, let me not be negative. We have Nandan and team persuaded the government to introduce Aadhaar. So that was a great entrepreneurship effort by those guys. Okay, and then you have people who have created the, all the Dr. Amul, Korean created Amul, which is it's a fantastic effort by which all local farmers can contribute the milk and get higher revenue. So you can be an entrepreneur without being a personal enrichment type. Like Dr. Korean of Amul is one such case, and the man who Sridharan, who's built all the railways for us. So when you guys graduate, you can be an entrepreneur and do public service and build giant setups, which will like in the case of Amul and Mr. Sridharan, the I think you can create benefit for citizens. It doesn't have to make personal money out of all that. Just remember that. I've talked too much.
So, on that note, let's quickly bring it back to Mr. Vaitheeswaran, and I'd also want your take on the culture that venture capital firms set on companies and startups, and how they look for early exits in 3 to 4 years, which puts a lot of pressure on startups and causes them to churn out substandard products. How was that different back then, and how did ventures grow in the eras where funding was not pouring so easily into the country?
So, like I mentioned earlier, I think the reality is that we didn't have the kind of capital support that is available today. And hence, it was always a challenge trying to raise funding and support. I mean, we didn't, there weren't any groups of VCs. You couldn't go to Google and list out here the top 10 VCs in Bangalore. Nothing was available there, right? So, we had to figure out our own ways of reaching out to people who may be interested in supporting startups in India. Very few and far in between. And of course, when the dot-com bust happened, the bottom dropped out, so life became difficult. But on that subject, I actually want to make a very different point. I think one of the key challenges for Indian entrepreneurs, even today, despite so much of VC support to actually grow a business, is I think what India needs is Indian capital. And the reason they need Indian capital is very simple. I think Indian capital, people who have money, it could be angels, it could be funds, but anything where the money is available in India will be able to support. See, it takes several years to build a business, right? Depending on the nature of the business, it could take a minimum of 4 years to 7 years to 10, 12 years before you build a 10 sustainable business. And Indian capital will be patient capital and able to support an entrepreneur. The reason VCs are not, in that sense, a challenge for Indian entrepreneurs is that most of them are trying to exit in a 4 year. So, what happens is VCs invest in an Indian company. The Indian entrepreneur is saying, can I build a business over the next 10 years? The VC who's invested is saying, can I sell my stake and make money out of it in 4 years? In other words, the capital and the business are not on the same page, right? And that's a huge challenge. And obviously one way of doing that is to see, can we get patient Indian capital, more of patient. I'm not saying all capital should be Indian, but I think more and more Indian people should come and support Indian entrepreneurs, giving entrepreneurs more time to patiently build sustainable business. So one of the reasons we're chasing valuations is because what else can you chase? If your idea is to exit the business in 4 years, you can't build value, right? And therefore you create valuation. But if the entrepreneur is saying, don't worry, I've got your back for the next 10, 12 years, go build a business, create value, then there's no pressure to create valuation. Then the pressure is to create value. And I think that's a real challenge that needs to be solved very quickly.
So there's an interesting question that our CEO has brought up. And let me read that out. So he brings up the point that, so you mentioned that startups needing Indian capital, but with the recent startup IPOs opening at a discount, how can that trust within shareholders be built?
Who is it? Are you addressing it to me?
Yeah,
either of you. And Mr. Vaitheeswaran, you can take that up. All right.
Okay, don't focus all your attention on pricing and discounting and IPO prices and after. I think that's kind of an awful mentality. Don't think about all that. Of course, sometimes you're unlucky, you will open at a discount. And sometimes it will rise back. What's the big deal? You look at the stock market, goes up and down. We can't make a song and dance out of it. Look at what they are doing. Are they benefiting anyone? What is the underlying thing? So what does it matter when IPO opens at a discount? It doesn't make any difference. The goal of life cannot be to maximize your wealth. Or what is worse, maximize your shareholders' wealth. Come on. How do I convince all of you at BITS Pilani to say, stop looking at shareholder value and discounts of shareholder value and IPOs, and discuss how do you do product innovation? How do you conquer blockchain? Yeah. Because if Indian entrepreneurs don't have some startups around blockchain, I think as a country, we'll be left behind in the race altogether. Yeah. Okay.
So with this, I'd like to ask a quick, short question first directed to you, Mr. Vaitheeswaran. In a few words, what advice would you give to budding entrepreneurs, students, and young startups that are looking to scale up and create a successful venture? What would your advice be in a few words?
Oh, I have just 3 words to anybody wanting to start up. It's very simple. Just do it. That's it. What else is there? Do it. There's nothing else. Just do it.
Yeah. Mine too is just do it, but with the addition, never take money from a VC. They will destroy your business. Yeah. Please remember that, kiddos. Yeah.
Okay, then thank you, Mr. Balakrishnan and Mr. Vaitheeswaran, for such an engaging and interesting conversation. And it was really fascinating to watch you all talk about, internet first companies over the ages and talk about your commonalities. And we're excited to now move on and present our next panel.
Thank you so much for having us.
We log out, guys. Pranit?
Yeah, go ahead. It was great to have you and host you at the India portfolio.
Thank you so much. Thank you. Bye.
डन कोई सीएल स्ट्रीम चेक कर लो एक बार उस पे फोटो आ रही है पीयूष शाह वाली इनमोबी वाली रिकॉर्ड स्टार्ट रिकॉर्डिंग साइमल्टेनियसली चलते हैं स्ट्रीमिंग और रिकॉर्डिंग हाँ छोड़ना चल रहा है क्या
Good afternoon, ladies and gentlemen. We are joined by Mr. Piyush Shah, co-founder of the InMobi Group, India's first member of the Unicorn Club. This session follows the journey of the InMobi Group, its ascent into unicorn status, the hurdles it's faced in doing so, and explores the changes in the entrepreneurial sphere since its inception.
A little introduction to our panelists here. We have Mr. Piyush Shah. Mr. Piyush Shah is the co-founder at the InMobi Group, and Mr. Shah has served the executive board of various companies, presently serving as the CEO and president of Glance. An alumnus of the Indian School of Business, Mr. Shah is an active investor in more than 20 startups. Prior to his tenure at the InMobi Group and Glance, Mr. Shah worked at Deutsche Bank and Citigroup.
Moderating this session, we have Mr. Ayush Vadva, a BITS Pilani alumnus and former CEL member. Mr. Vadva is the founder and creative director of Owled Media, an award-winning creative tech agency and video production house. He has collaborated with leading names in the industry, including Cred and Mr. Angarwaraku, creating over 1,100 videos. I would now like to give you the stage, Mr. Vadva.
Super. Thank you so much, Pranit and Akshay, right? If I'm Gayab ho gaya, Akshay. Anyway, hi Piyush. Thank you so much for joining us. It's always a pleasure at any event that BITS hosts to have entrepreneurs like yourself. It's not easy, being where you are. So firstly, thank you so much for giving us kids the time that is really, really valuable. How are you doing right now?
Very well, yeah. Thanks. Great to be here and excited to talk to you guys. Loving it. It's a Saturday evening, so let's keep it light.
Absolutely. And I think keeping it light is not the kind of notion that the startup culture usually sort of imbibes. मतलब हमारे startup culture तो होता है ना एकदम hustle करो and new problem solve करना है. This, what is the deadline? Yesterday is the deadline. And you've been, you're not a stranger to the startup ecosystem. You've been a very active investor, and InMobi was the first unicorn. I want to sort of take a step back, एकदम sort of rewind करते हैं. And this is the early days of probably InMobi and when you were raising funds. What was it like to be in that ecosystem when it wasn't as mature as it is right now in 2020 and 2021? What was the challenges probably when you were turning into like a unicorn? What was the ecosystem like?
Yeah, no, I think you're right. A lot of what we see today, I think is, I keep feeling कि यार काश हमने अभी चालू किया था, because there's so much capital, so much understanding, but no complaints. Yeah, I think what we did back in 2007, 8, 9, it seemed very early, and for us, I would say the bigger challenges were less about people or execution or strategy. I keep saying the bigger challenge was under that belief. I keep saying it. Log अच्छे होते हैं. It's all the Indian team, strong folks, IITians, whatnot, very strong on hard work, passion, resilience, सब कुछ, right? So then, what was missing when you go out and tell these people, "Kia, let's just go out and build a company, a world-class product and tech company out of India," the way Infosys did that for services back then, तो लोगों की फटती थी internally. कि यार क्या बात कर रहे हो? Are you saying we'll beat Google and Facebook and these guys, or Tencent or Baidu for that matter in China? I think what was the biggest challenge for us was that inner belief कि यार निकाल सकते हैं, फोड़ सकते हैं. And I think that took maybe many years of shaping कि भाई वो जो लोग, the product and engineering guy sitting out there in Mountain View or Menlo Park, वो हमारे ही बैचमेट हैं. वो वही IIT कानपुर, वही गिंडी कॉलेज, वही पैक चंडीगढ़ वाला बंदा है, हमारा बैचमेट है जो चला रहा है. So it's all the same people out there building this stuff. So why can't we go out there and rapidly innovate? I think that was very important, that belief, and even now I feel that is an important thing that doesn't change from back then to today. So that's one really big thing. I also felt a lot of people, उस समय हमारा था कि यार, we were in this place called Belandur in Bangalore. And we used to say, यार, Silicon Valley is just like it's not a location. It's a mindset, right? So Belandur is our Bay Area, भाई. Right? वो हमारा Bay Area है यार. हम यहाँ पे headquarters बनाएंगे.
we'll do this out of
Right.
India and take this global. So a lot of that thinking, ki, nahi, we are not a satellite of Google and Facebook sitting out of India, but we are it. This is the epicenter of all innovation, all product development. I think that a lot of that inner Gouda, if I might use a word, apart from the Gouda and apart from the core belief ki yaar kar sakte hain, is what was needed to survive. So I think that's what we have done. That's what was the biggest challenge. Baki sab capital, innovation, execution, yeah, wo sab ho jata hai. But I think it just that was important to dispel. And it took some years, and once that got done, then there is enough in the system yaar. बहुत हिम्मत है लोगों में. And I think we pulled it off. So that's what I feel here.
बहुत टाइम बाद मैंने एक गूदा वर्ड सुना. मैं अपनी टीम को बोलता था कि बॉस ये रिस्क लेना ना, अगर ये जो हेड ऑन जाना है तो गूदा होना बहुत जरूरी है. And I so resonate with this. But when I look at InMobi and even glance, you guys are not building a product for just India. These are global products with the ability to probably reach billions of people. And probably in India, of course, there are two kinds of doubts, right? Like you doubting yourself. Like you said that you have to have that belief. But there's also other people doubting you. While on a country level, I'm sure you must have gotten over that soon. When you were probably pitching to countries outside, or you were meeting people who are outside of India, when did that group of people stop doubting you?
I think a lot of that self-doubt actually is more in our head versus, and I can maybe say in this group, there is a whole thing for Gori Chamdi and what we feel ki nahi, these people are ahead of us and whatnot, purely because of the way they can sell themselves and pitch themselves and all of that, right? I personally feel in our case, when you are out there, when you are authentic about kya karna hai, when you're showing your passion about this whole thing and connecting, there are enough people who want to bet on you, right? And fine, it took actually, and I think Naveen always has shared that story, and I love that whole thing. For the whole couple of years, for us, it was not the people in India who betted behind us. It's actually folks in the valley who said, hey, this is good, this is big, and you guys will do well, so let me bet on you. So I think that's one thing. It's a lot about going out there, being able to just go out and pitch. I think trying to narrow your focus only on India, especially if it is a product that can be global, is another mistake that many people make. क्या नहीं मुश्किल है, क्या बात कर रहे हो यार, वो अमेरिका है, यूरोप है, चाइना है, कैसे करेंगे? I strongly feel that is a single biggest huge thing that worked in our favor. कि नहीं यार, India at that time, India was छोटा market है. Let's just go out. Let's just figure out a way to do it. And we had people, like hundreds of people sitting in our Bangalore office doing this from here in the beginning, and then just traveling and going there before we set up offices in US and China and Japan and whatnot. So I think it's all possible. So that's one thing I feel has really worked for us. Overall, of course, I mean, the rounds, and I keep saying it, when you have Kleiner Perkins, you had John Doerr, we had Ram Shriram who betted on Google, and then Masa came in, right? The first investment SoftBank made in India, directly by Masa. I think that after all of this, then it was important for us to say, aur kya chahte ho yaar? Come on, that's where the confidence should come for both internal people and external people. And someone out there saying, hey, you guys are doing something big shit, I'm going to bet behind you. That's all you need. So I think a lot of that happened. And I think going global was one of the best things we did overall. And also one more thing, I keep saying it. Yeah, it's good to say you're a tech and product company, but side may do something on services and make money and all that. I think we were very clear कि यार ऐसे तो we can't compete against Google, Facebook and these guys. They are large monsters, इतने लोग, अच्छे लोग, good products and all that. So the only weapon we have is speed to our advantage. how do you work and innovate with our customers before those guys get there, and then have a class of customers who will work with us. So I think innovating not just in good times, but also in the worst of times. I think that we never stopped. We kept feeling we had more lows than highs, always. But each low meant कि यार कुछ तो बढ़िया निकलेगा, hopefully. I think over few cycles we figured कि यार ये low आया है तो यार उसको पकड़ लो, कुछ बढ़िया होने वाला है हमारे साथ. And I think that's really I feel not stopping to innovate, because if you just stay at your current dhanda and the current 1-2 saal wala revenue, people will catch up. All that. So I think both the global part, just the innovation in tough times, all those were big challenges for us, but I think we just did a good job there overall.
There's one thing which I'm very curious. जैसे आप जब story बता रहे थे, I don't know if you see this now, but you have a slight shine in your eyes while telling the story. It has pride. It has a lot of hard work. मुझे नहीं पता शायद आपको दिखती नहीं होगी because आप वो cross कर चुके हो threshold. But now that I'm talking to you for the very first time, I can see that you're still passionate. As you said, Saturday evening. If you don't love that, तुम नहीं हो सकते. My question and my curiosity is around dreams, right? ये इंडिया से सोचना कि मैं आज इंडिया में प्रोडक्ट बनाऊंगा और वो मैं यूरोप, यूके, यूएस जैसी देशों में, कंट्रीज में बेचूंगा, इसके लिए यू नीड टू हैव दैट एबिलिटी टू ड्रीम. एंड आई हैव सीन दैट सम पीपल इनेटली हैव दैट एबिलिटी टू ड्रीम. कुछ लोग है ना अंदर से होता है वो ड्रीम, मतलब यार मैं 5 चीजें कर रहा हूँ पर मैं 1000 कैसे कर सकता हूँ, मैं 10,000 कैसे कर सकता हूँ. Now my question is, do you think यार कि वो innate ही होता है, क्या वो जिसमें होता है उसी में होता है, या फिर इसको सिखाया भी जा सकता है, इसको सीखा भी जा सकता है?
नहीं, बिल्कुल सीखा जा सकता है. Couple of things ना, हम कोई धरती पे लेके तो नहीं आए थे these dreams. I think each one of us have, and it's not, I keep saying it, this is not about 3 or 4 co-founders of InMobi. Your dream तभी हो सकता है when your next 100 can also dream along with you. Only at the founder level, if you dream, उसका क्या करोगे? What's the point? I think ability to dream and be able to get the next 100 to dream along with you is what I think we cracked, right?
Interesting.
And ऊपर लेके एक आदमी लेके बैठ के उसको रख ले तो nothing's going to work out. Nothing's going to work out, because then every person out there is doing like a job, and you don't. If you're dreaming something large, if you're going into the world of unknown, not known, you're not sitting here saying, "Yeah, let's just build an X of Y, Uber of India, X of Y." No. We said we'll do something that no one has done before. Jahan Google and others are also trying to learn in the same time. So when there's an unknown out there, and complex and dynamic, I think it is all about getting people to dream alongside, and just constantly figuring out what kind of people can come in your journey along with you. I also again say this company is not built by ye 3, 4, 5 hum co-founder. This company has got at least 100, 200 people who operate like co-founders without being called one. I'm not kidding. This is not lip service I'm making. ये हमने देखा है. लोगों में नशा है, लोगों में जुनून है कि this is mine. And I think it's not that they will all own enough stock or whatnot, but there's something about the mission, something about the dream, something about helping them do things that stretch themselves. I think that's something that has really worked for us. So ये चीज, if more and more people in the country, and now it's happening, right? It's happening in front of us. Because what happened in the Valley, there were 5 cycles in the Bay Area of ups and downs, and people saw their neighbor becoming whatever they became. I think we now have that in this country. We now have that. But capital तो है. लोग तो हम ही सारे वही थे जो वहां जाके कर रहे थे. Right? Idea की कमी है नहीं, grit की कमी है नहीं. What was missing was I would say that belief and mentors and people who have done this to show that possible है. Let's just go out and do it together. because it's possible to do this sitting out of here itself in many cases. So I think the net we all need now 1 million more people to dream and say, I want to make a Flipkart, I want to make a Paytm, an Ola, and InMobi, and whatnot, a Freshworks, and the time has come. I think the time has come. So I'm super excited about what's in store.
No, I completely agree with you. In fact, like Glance was our client as well last year, and it was such an exciting team to work with. And I don't say it for the sake of saying it. I can completely testify, although nobody to sort of, we have built such a huge team, but can completely testify that the passion flows through. It's probably not just in this conversation, but is at every level that at least I've interacted with. One thing you said that right now you have all the ingredients per se to probably build the company that you want to build. And I think we have seen a lot of startups do that over the last 1 to 2 years. We've seen a lot of funding come into the country. And throughout 2020, 2021, these founders were celebrated a lot, right? Every company, every founder was celebrated. Like shows like Shark Tank, which I personally thought would be like a big fail. And probably not for the kind of audience that we have right now at Conquest, but they opened the ecosystem of that. क्या एक startup जैसा एक term exist करता है, funding जैसा एक term exist करता है, CAC जैसा term exist करता है. But over the last 2-3 months हम जैसे देख रहे हैं कि market का एक sentiment change हो रहा है. तो आपको क्या लगता है कि यार ये short lived है या फिर you will see that people are questioning कि यार ये valuation इतना क्यों है, profit क्यों नहीं है, like सब जो long term बोल रहे थे, now they suddenly focused in this कि 6 महीने में क्या होगा, 1 साल में क्या होगा. Are we losing that celebrating founders and entrepreneurs, or is it just like for this short run and we'll get over it?
No, yeah, I think see, that's the whole thing. We shouldn't have celebrated too much, and we shouldn't panic too much at the same time. I always maintain कि यार ज़्यादा कूदो मत और ज़्यादा मतलब डरो मत at the same time. And valuations, media, all that is just pure external markers, indicators of what's happening in the world out there. And that should mean very little in general. Of course, जो हवा वाली चीजें हो रही थी, that will stop and whatnot. But that does not mean that the opportunity does not exist. Right. That does not mean that there aren't good quality problems and good quality people, excellent people in this country. That does not mean that वो availability of capital is going to dry down. Not at all. कहाँ डालेंगे लोग, डालेंगे तो डालेंगे कहाँ? Right. China is out of action, out of access maybe. And any savvy investor will look at this country and say, boss, there's something happening out here. So I think it's just very short-lived. I think whoever is focusing on building something should just stay put, keep building, figure out prudence and caution and whatnot. But staying put is very, very important overall. And I think we as InMobi and Glance feel, this is a time when good companies will become great. And यही मौका है for great companies who were fundamental कि लेके पकड़ लो और कूद जाओ, because this is the time to build very big, large companies. Most of the great companies we all know of actually became very, very big right around a recession, right? So I think it's that timing. Of course, that doesn't mean you have to jump up and down and throw money and whatnot. A lot of the irrational exuberance is not good. Right. But flying in jets and trying to celebrate your first round of funding is not a good idea. But I'm personally very, very excited. अगले 5 से 10 साल India will go through a crazy wave, and we have everything. All we need is the belief.
No, that makes a lot of sense, and thank you so much for the insights. I'm really intrigued to know one thing. Today, when you have a business idea and you think it's scalable, the first thought is, this is the money that I want. Let's reach out to these 10 investors, 20 investors, and let's raise money. The idea of starting bootstrapped is decreasing more and more and more. And I was talking to somebody, and they very confidently said that I'm very firm believer of that there can't be another Zoho. that there can't be another bootstrap firm which can reach to that level. Do you think the statement, like, what's your stand on this statement? कि यार क्या अब एक बड़ी company बनाने के लिए funding is absolutely integral, or is it still an option?
Yeah, I think it's still an option. I don't think there's a straight answer here. People have taken both routes and made it happen. It depends upon the sector. It depends upon the DNA of the founder. It depends कि कितना गुदा है, कितना resilience है कि निकाल लेंगे, right? For those out there who have done it, like a Zoho or a Zerodha and all the Zs, I really marvel them because they just stuck along and did what they did and figure out an opportunity out there and just stuck to it. But at the same time, I feel if there is an opportunity, if there's a window, and lag raha hai ki there is speed is important and expansion is important, and there are others out there in the mix who are trying at the same stage, I think jumping out through massive movement and velocity is also a great option. I mean, we did that. It's just that we were just very careful. We will call ourselves the first unicorn back then in 2011, but then in 2016 it became the first profitable unicorn of the country. So I think right. That's how I think about it. I think it'll be foolish to say nahi, mujhe zarurat nahi hai paise ki. I won't. The reason has to be clear. I don't want to divest stake. I think it's okay.
Right.
Because when there's access to capital and more than capital, there is hardcore mentorship and guidance and depth. And depends on who you take the money from. A lot of this is very important because these are all the same mistakes. No book, no podcast, nothing can teach this, right? So it's all dynamic. Har apne step mein, what is that micro decision to be taken? And if there are people around you who can help you, then it's fine. So I don't have a straight answer that way. There have been more cases where having access to capital really worked. There are more exceptions where they did what they did, and I regard them. But I don't think people should be dogmatic about it. कि नहीं ऐसा नहीं है. That's all I can say.
आपका जब यूनिकॉर्न टैग मिला था आपको, क्या परसेप्शन में क्या फर्क आया था आपकी पर्सनल लाइफ में और प्रोफेशनल लाइफ दोनों में? मतलब अच्छा, अब यूनिकॉर्न बन गया अब.
This was in 2011,
right?
And I don't think anyone else even knew what it meant. Someone would have coined it that time and whatnot.
Right.
Firstly, तो घर में थोड़ी respect, घर और ससुराल में respect right? Because कुछ तो कर रहे थे types, so that definitely happened. But that was उसका shelf life बड़ा low होता है. वो 2 महीने में it came down after you were back to your grind and whatnot. But no, on a serious note, I think what happened for us is when you have one of the biggest guys in the world like Masa, who backed us and who backed Alibaba and 5 other places.
Right.
We were already ambitious. We were already saying, yaar, ye kuch bada karenge out of India. But ability for us to think far bigger, far more audaciously, we will try and go alongside a Google, Facebook, and Tencent and try and be a third pillar or fourth horse in that race. That became possible. A lot of people who we were hiring outside, they said, these guys are serious about this stuff, so we can join them. Some of the best people from Google and Yahoo and Amazon joined us that time. And why would they do it otherwise? Why would they do that in 2011-12? So I think a lot of this is not just about money, right? It's about ambition. It's about other people realizing that you are serious and there's belief, that you are keen on doing something. And in our case, I think just the perception that we are out there, we will innovate. And this allowed us to innovate on 5 new things very, very rapidly all together. So overall, I feel the whole days on pre-unicorn, post-unicorn has been very interesting. We also made super mistakes, right? We just went crazy and hired like 700 log in like 3-4 months globally.
Wow.
Europe and China, Japan, Africa, US, whatnot. And that's when we completely screwed it up the first 6 months of raising money. Thank God we did not let it happen for too long. But then that was a inflection point where we said, yeah, kuch to, we need a fabric. We need a culture and a fabric that is ours. This is not we going out and saying, yeah, ye Amazon ka way hai, Google ka way hai, Infi ka way hai. No, this is our way. This is the InMobi culture that we defined. And I think that is the second large inflection point beyond this ambition that truly got us here. और सब बकवास है. Strategy, execution सब करते हैं. Passion सबके में होता है. Right? I think that bet on people and people stretching beyond their own imagination, people wanting to surprise themselves first and not their bosses. I think that, thankfully, I think वो गलती हमने जो की after raising our money and then फटाफट realizing it and then doing this has actually helped us in the toughest times. You know, when the chips are down is when true character comes out. लोगों के. And jitne bar the chips were down and the low was there, it's a set of people who would just say, yaar, karte hain. I think that journey is very, very special. So I know you were asking about the whole perception point.
No, this is amazing.
just our experiences before and after was fascinating. And I just hope when people are raising money now, and I saw I think Alak Pandey, the physics wala guy, and I saw his story. It's so fascinating. मतलब वो बंदा अब I'm imagining वो घर बैठ के सोच रहा है भाई करूँ क्या इतने पैसों का. I just did something. He already built something crazy, but I just hope no one screws up and no board member says go crazy, but he just stays true to what he was somewhat. So anyways, that's how I would say.
No, I think physics, Wallas, I'm still confused about the pronunciation, but their story is incredible. The way they have built, and in a very frugal way, if you see, right, and in a very frugal way, they've built a huge empire. I think it's very inspirational for, in fact, a lot of folks here as well who have studied that PCM पढ़ के जो engineering करी है जिन्होंने. So very, very inspirational for all of us. And one of the key things, like my takeaways over the last 25 minutes is, in general also, I'm a true believer of no matter what the product or service is, your team is going to be one of the biggest moats that you have. And you said that the first 100, 200 people, they acted like co-founders. That's आपने बहुत आसानी से बोला वो, but वो बहुत मुश्किल है. मतलब I know कि team building is damn hard. It sounds easy. It sounds like that, LinkedIn पे डाल दिया, AngelList पे डाल दिया, agencies hire कर दिया और लोग आ गए. ऐसा नहीं होता. एक fabric जैसा आपने बोला, एक culture होता है company का. I want to understand, for anybody who is a potential entrepreneur here, they will now go into the market and find their own team. What is the mindset? क्या देखना होता है पहले 10, 20, 50 लोगों के अंदर?
एक ही आंसर है इसका. I think hunger, भूख, right? There's nothing beyond that. क्योंकि challenges and complexities and lows and failures तो होने ही हैं. I'm preaching to the choir. But it is that hunger and resilience that changes things dramatically. I've realized this over the years. यार वो Rolodex and senior people, because they know the industry, they know contacts, the been here, done that वाले तो बिल्कुल नहीं. Because the moment someone says I've been here, done that, don't worry. That's a red flag. Because in all likelihood in your startup, you're trying to build something which is a unknown or a known unknown. अगर वो known है, तो in any case it's not going to get enough value, right? So the first thing, at least we realized, कि hunger is critical. And frankly, I have this whole theory of this Maslow's pyramid of किस तरह के लोग are truly going to be impactful with you in your journey.
Okay.
I think जो नीचे है base condition of pedigree, पढ़ाई, IQ, hard work, that's roti kapda makan. That's the lower part of the pyramid. In general, Indian अच्छे होते हैं. लोग तो अच्छे ही होते हैं ना. Like दाग अच्छे होते हैं, लोग भी अच्छे ही होते हैं. जिसको आप hire करते हो अच्छे ही होते हैं. उसके ऊपर comes कि is that person passionate about this whole thing? But I feel कि हमने passion को भी ज़्यादा overrate कर रखा है. Right? Every entrepreneur out there is very passionate about his or her idea. But then they fail, they drop off, whatnot happens. So passion also is overrated at times. Then comes the talent and fundamental strategy, whatnot. But uske upar I feel is this hardcore notion of relentlessness and resilience. Agar hunger ho or fat rahi ho, and if people have that relentlessness, right, that is the key point. So I feel talent and passion are overrated. Resilience is what matters out there. जो लोग, and if you can figure out somewhat कि ये बंदा साथ देगा और लगेगा साथ में भूखा है, then that is the single biggest qualification increasingly, at least for us. That's one from how you look at people. But that doesn't mean कि आप ऐसे ही वो करेगा ना. Why should the person give their heart and soul ना? क्यों?
Correct.
I think that is where ability for entrepreneurs and founders to say, "Here, come in this journey. I do not want you here because I want better productivity and results for my goals and targets and whatnot."
Right.
It is very important to have genuine care to grow these people and to get them to unlock their inner potential. I'm saying a lot of big words. बड़ा मुश्किल रहा है. अभी भी we are work in progress on this. But I think we have figured out a model कि अगर लोग आ जाएं and you bet behind them beyond what they ever imagined, and you give them the canvases that they never expected they could do, and they were 70% ready for the canvas, not 100%, 70% ready. And then there's that discomfort that is there. When there's a discomfort, and they say, "Sir, क्या बोल रहे हो? मतलब पागल हो गए क्या?" That is when people rise to the occasion. Because वो गलतियां करेंगे, एक बार, दो बार, तीन बार गलतियां करेंगे. But then they figure out their formula. They figure out their sweet spot. Here, what is working for them to crack something. And then it is not stopping. That is creating unique layers of confidence in your organization in the top 100. And then they will keep doing it. So I think the more and more we create this layers and layers of confidence, self-confidence, self-belief in people, the more and more they rise to the occasion in tough times. The more and more they end up operating like co-founders. Because it's just special in the way ultimately, I know there's a lot of thing about salaries and great resignation because of all of that. People want कि यार मैं कुछ काम करूं जिससे I have self-belief and self-confidence कि कुछ किया है. And of course, the money is an important byproduct, don't get me wrong. But I think that is very, very important in the way at least we have gone about looking at these things. And in all of this, one very contrarian thing we saw and in others is how do you create something where there is a soul, right? So बड़ा weird सा हमारा concoction है where at least we try and run a company where they have to operate like a pro sports results oriented team,
right?
But yet with trust and care, yet with the feeling you are part of a family. Because when you have a family and you have a family member in that business, तो आप तो patient होते हो ना. आप निकालते थोड़ी हो first, second mistake में. You're patient, you build that guy, and that person gives back to you overall. So I think that combination of results and yet trust and care is that crazy intersection that we have gone through. And that is what I think is very important, because trying to be cutthroat is not helpful. Trying to be only about care and trust and warmth also is not helpful. Dhanda to banana padega.
Correct.
But I think that combination is very powerful, and I feel we have gone in that journey. But anyways, long answer. Yeah, sorry. I think you asked.
I do not at all. This is I didn't want this to end. And this is such these are so many insights. I'm sure people are watching them. They better be taking notes here. But just to like my key takeaways were so interesting. Is that self-belief and, as you like to call it, Guda, resilience. With these two things you can really pass through, because as you said and as you brought into our perspective, सब कुछ है. पैसा मार्केट में आ चुका है इंडिया में. इंडिया को एक वो बेसिक रिकग्निशन मिल गया है. हमारा जो बेस लेवल एजुकेशन है, एक माइंडसेट है, नॉलेज तो चलो शुरू से ही थी, वो भी है. तो बचा क्या? बचा सेल्फ बिलीफ ही है. आइडियाज तो आई थिंक आर वेरी यूनिवर्सल इन नेचर. But this is an incredible. Thanks so much for, of course, taking all the time to give the answer. मतलब मुझे तो काफी motivated feel हो रहा है. I'm sure people who are potential entrepreneurs in the in the viewership will also be feeling very, very motivated. I think Pranit mentioned that we had some questions from the audience as well that we quickly want to take up. Can we?
So we're running on a slight time crunch, and I don't think we'll be able to take up questions from the audience. But it was a very, very insightful conversation. And thank you, Ayush and Mr. Shah, for this insightful conversation.
Thank you so much, Piyush. It was a pleasure doing this. I think I've taken a lot of mental notes from this conversation. And बहुत मजा आया. मुझे बहुत अच्छा लगा बात करके. And I liked the fact that you were very transparent about things. बहुत ही practical बातें करी आपने आज. You actually talked about what happened in the ecosystem. So thank you so much for being that practical mentor that all of us sort of need at this stage. Thank you so much.
No, thanks, yeah. Mazaya. And one passing last thought. I know it's a bunch of Bitsians out there. Right. And while I'm not from Bits, I have this deep old connection. I've done things in your campus that many of you have not done, including being on top of the clock tower, being in OSS many times, and eating a lot in Volga. So my sister was in Bits. So I used to spend a lot of time in Bits. And all your bhavans and whatnot. I just feel I always thought Bits was a very special place, and I regretted not getting into Bits. But great that I'm able to talk to you guys and share what we are sharing.
मैं अब थोड़ा सा jealous हूँ. मैं pass out हो चुका हूँ, फिर भी clock tower पे नहीं गया हूँ. But that's okay. I'm glad you have context of our campus. It just makes the conversation a lot more special. And OSS, I think, is one thing that all of us look forward to. But lovely conversation, Piyush. Thank you so much for doing this for us. Really appreciate it.
Thanks, guys. Thank you. Take care.
Thank you so much, guys, in the audience, for sticking around. And I hope you got some real tangible value out of this. At least I did. And thanks, Pranit. Thanks, Akshat.
Thank you so much, Ayush and Mr. Shah, for your invaluable words and knowledge. It was inspiring to hear the story of how InMobi, India's first unicorn, was built. Mr. Shah's insight on his experience in building India's largest mobile advertising company will go a long way in helping our viewers in their own journeys. Moving on to our next session, Indian Gaming Dream. Next in the exciting speaker Presenting to you,
Mr. Nitish Mittersain, the managing director and the founder of Nazara Technologies. He founded Nazara in 1999 when he was still in the first year of college. Nazara became India's first listed gaming company in 2021. Nazara Technologies network includes big names such as Nordwind Gaming, India's #1 esports company, Next Wave Multimedia, makers of WCC, the world's #1 cricket game franchise, and Sportskeeda, India's #1 esports content destination. We're excited to hear him talk about the potential gaming holds and how it can be the next big thing for the Indian youth.
The moderator for this session is Mr. Suhas Modwani, co-founder of the amazing community at the Product Folks, a volunteer-driven community of over 30,000 plus product managers and enthusiasts who are passionate about making an impact. Over to you, Suhas.
Thank you so much, Pranit and Akshat. I think super excited to take this opportunity to chat with Nitish. Nitish, honored to host you today at Conquest. I think lots of folks who are tuning in are super excited to know about your journey. Definitely a long one. And like I was sharing with you backstage, I think while I was going through some stuff that you've spoken about earlier, which is available online, I'm super interested to go deeper in it in today's conversation. So we'll cover a little bit about, we have only 30 minutes, unfortunately, although we'd love to go longer and, pick your brains on the last 20 years of your journey. How I'm thinking is the first few minutes we'll chat about your journey in general. I think the early days is something we'd love to learn a lot more about. Lots of young folks, lots of college folks on this call. So we know gaming as it is today, but we'd love to learn how it has evolved over the years and how even the Indian ecosystem, right? I'm sure you started almost 2 decades ago. So that's where we'd love to cover the first bits of the conversation. Next, we'll go deeper into the gaming industry in general. How has that evolved over time? And like you always mention, I think the TAM is huge today. Lots of focus on the Indian market. So we'd love to gain your insights on that. And towards the end, I think it's a section that we love hosting. It's called What I Know Now, I Wish I Knew Then, right? So I think some of the insights that we'd love to think of it as a rapid fire of sorts. Hopefully we can cover most of this over the next 30 minutes. But getting started, Nitish, early days, I think you mentioned you came from the textile, your family came from a textile background, got hands on computers early on, I think at the age of 6, 7. Would love to learn more about, how has that impacted or how has that shaped what Nazara is today, right? So can you walk us through some of those early days?
Yeah, sure. Excited to be here, Suhas. So it was pivotal for me, right? Because my family came from textile business. And my dad, I don't know what he was thinking, because this was way back in mid-80s. He bought me a ZX Spectrum when I was like 5 or 6. And today he often says that was his, single best investment he ever made. So I got completely hooked onto the, the whole, the ZX Spectrum and tech. I first started playing a lot of games. By the time I was 7, I started coding games in BASIC. And at that point of time, you used to type in the basic code, save it on cassettes actually, and then we play it back. So it was different times, but yeah, that was really my entry to the world of technology and gaming, I would say. And that became my world actually after that. I tell you, did not ever look at the T of textile or anything close to that, right? I was growing up, I did my schooling in Bombay. By the time I was finishing my 10th standard, I actually started a bulletin board service running. There were like 10 computers in my bedroom, 24 MTNL lines. I used to run 2,400 BPS modems that time. And getting a 14.4 kbps modem was, really exciting. But we had like a mini internet. The internet had still not come to India. And I was running a mini internet off my bedroom, which was very exciting. And I met a lot of interesting people on that network that I launched, including who went on to be my mentor, the legendary actor Shammi Kapoor, who used to log into my BBS. And then the journey continued. I was in Sydenham College. I attended a total of 8 lectures in 5 years. So that's, you can, a little bit over a lecture a year. I spent all my time in the computer center at the college. Yeah, but I was still doing a lot around the gaming space. And that's really when I launched Nazara in 98, 99.
Very interesting. And that was also pretty early, right? I think you launched Nazara while you were in college, maybe at the age of 18, 19.
Exactly. Yeah.
Nice. Nitish, one question here before we get into the gaming side. How important is the environment, right? Like what really helped you go deeper? What were the motivations you had early on, given, most of your family is probably non-tech? Was that intrinsic motivation? How did that translate into building such a large company?
See, I came from a business family, so wanting to do some business was always in the genes, right? I'd seen my family, my dad, my grandfather, do business. Uh, Computers and gaming had become my life, like I said, from early age by the time I was in college. And the whole dot-com boom was happening in the 97, 98, 99. There was this massive dot-com boom. So I think 1+1 became that 3, right? That let's do something, let's start something in this space. And I actually started with designing websites for different companies and all of that, and got into this space in that sense. And eventually I said, why not launch gaming? Because I used to see in my computer center, right, after college, after the work was completed at 2, 3 o'clock in the afternoon, me and a lot of my friends used to, use the computers in the computers lab to play all your multiplayer shooting games, like PUBGs of those days, right? Like,
What was the PUBG of those times? Very curious.
we used to play Doom, and I can't remember now which games they were, but they didn't know to go home till 7 o'clock, 8 o'clock, and it just made me think: was India's a young nation? How can gaming not become a business here? That time there was no business of gaming. How can gaming not become a business here? I said, let's try my hand in that, and that's how I started Nazara.
Interesting. No, thanks for sharing that. How was that experience? You started off in college, 99 .com, like you were probably getting started, and then I think in a couple of years the market probably slowed down.
Yeah.
Reason I ask this is probably in today's time we are looking at the next 9-12 months to even maybe get into a similar scenario. I'm not sure if it will be the same, but just to get your insights from there.
Sure. So, there was a huge boom in 99 and early 2000 because the dot-com mania was at its peak, and that's just when I entered business. There was an equally violent crash, right, with the crash of 2000, which started in March, April of 2000. I was very young that time. I was 20, 21. By the time I was, or maybe whatever, I was 20. So I didn't have any experience. And because I didn't have any experience, I didn't really understand the magnitude of, what was happening out there. I had started this company with a dream that I had. I was running it. It was too early to launch a gaming business, which means actual monetization model was not there. But dot-com days, if you had eyeballs, it was enough, right? So you were only chasing eyeballs, which now I call vanity metrics, uh, and not real metrics. So there was no monetization model in any case. And with the dot-com crash, it became impossible to raise capital as well. So those early years, I was like by 2001, 2002, I had a debt. I had borrowed money from friends and family of 2, 3 crores, which is equivalent to 20, 30 crores today. And no monetization model. So like I often have said, I probably did. My mom was very keen I go and do an MBA in the US. And I tell my mom, that I landed up doing a much more expensive and much more enriching MBA sitting right here, trying to figure all this out, right? But again, I think those early years of experience and fighting those hard times really has made Nazara what it is in terms of being a resilient company. And our DNA is quite shaped by those early experiences.
Correct. Are some of those early folks that you ended up hiring still building Nazara with you? Because I think you started this journey as a sole founder, but in 2015 you had an external CEO come in. But how easy was it building in this journey?
We still have a couple of people around since that period.
Right.
Although of course we went through many cycles and we pivoted a lot post that early start, right? But yeah, Manish, our CEO, joined us in 2015, and that's been a great help.
Nice. So was he like the co-founder that you were always finding? Was that a challenge? Because I think in today's time, many young folks who want to build out companies, they're probably very ambitious, but sometimes don't find the right co-founder, or sometimes it's the technology that becomes the barrier. How do you navigate through this particular
I
journey?
think for us, as we wanted to launch another phase of growth in 2015, Manish came in as CEO of the company and really helped expand the bandwidth. And he had a much stronger education and professional experience, work experience than what I had. Right? I was very hands-on. He came with a lot more processes and different approach than me. So I think as a combination, we've worked very well over the last 5-7 years. And that bandwidth really became 1 + 1 = 11.
Nice. Yeah, I think that's where I think getting two solid folks together, that opens up a lot more opportunities, right? Like you mentioned, lots of things that were probably on your bottleneck. There you get someone who's complementary to you, to help fix those things. So I think that's where super useful. Going deeper into the Nazara journey and in the gaming space in general, early days when you probably wanted to launch your first product, right? Your first game. How did ideas come to you? How did you go about building the process? Okay, hey, this is something we want to build. Did you do extensive market research? How did you, back then I'm sure technology was very different as it is today. Has the process changed over time? Because you mentioned, I think now there are tons of developments. Walk us through how it looks like building out a game.
So in 2004, post we recovered from the dot-com crash. In 2004, we were building games around cricket for mobile phones. And that time it was all Java, J2ME phones like a Nokia Series 60, etc. And your distribution was largely the telco actually, because you didn't have most of these app stores around. And you also didn't have Facebook and Google to target consumers and, really push the content to that extent. So the telcos were a very interesting distribution medium because they had millions of subscribers and they could partner with us and distribute. So we were making these cricket games, and another anecdote I often share is because that was also pivotal for us. I was trying very desperately in 2004 to partner with Airtel, because Airtel was one of the largest telcos and I wanted distribution through them. But Airtel would not even take my call because I was an unheard of company and Airtel was such a large giant, right? So I was very frustrated, and in that frustration, I thought, I have to solve this. I need to do something. And then I thought at those days, Airtel's brand ambassador was Sachin Tendulkar in 2004. So one day I got so frustrated with Airtel, I said, boss, I will go to sign up Sachin and make a cricket game around him and not give it to Airtel then.
Interesting.
So I reached out to his agents. It took me 6 months, and sometime in late 2004, I found myself sitting in Sachin's home one day.
Wow.
And of course, I was after the entire fanboy moment. I showed him what we were doing. I'd actually made a character of his in the game and taken it and shown it to him. Those days, Sachin's endorsement fee used to be $1 million a year. My budget was $10,000 a year.
Wow.
Right. So we finally closed the deal at some $30,000 a year or something. I don't even remember the exact number now. But I think it was not for the money that Sachin did the deal. He liked the concept and he liked the youth connect, etc. And I was also young that time, 23, 24. So he said, okay, let's do it. After that, Airtel flew down to Bombay to sign the contract with me. So that solved the problem.
I think that's a lesson in negotiating, like business negotiating 101. Maybe for another day, but we'll have to go deeper into that. But that's an interesting anecdote, right?
Yeah.
Has there been similar stuff that's happened over the years? Lots of bigger stars. I think today you work with, esports companies, gaming, lots more that have happened post.
Yeah. No, of course. I mean, such incidents as a company keep happening, right? I'm just recounting some early incidents.
Yeah, no, that was very interesting. Thanks for sharing that. I think that was very interesting. Before we go deeper into this, I'd love to cover, like you mentioned, I think Dotcom was one part of the journey post which you came out, started building the company. Early days, before today's, of course, post-Jio era, massive internet distribution. Early days, how was the consumer behavior? Were there lots of people buying via telco networks? How was it back then?
It was very early, but yeah, consumers were starting to their options were limited, right? for content and what they could access. So to that extent, yes. But when I started in 2004, we had 6 million mobile phone users in India,
Okay.
right?
Okay. And
And
India was your primary market. You weren't looking to do.
primary, and data, etc., wasn't really strong, right? You had to actually call. Very few people had data enabled capable devices. Even if you had a data capable device, you had to actually call the operator and activate a 499 rupees a month data pack. Then you would start accessing data. Even then, the data was 2G, right? So there were a lot of constraints, and I think these really got unlocked only in 2007 onwards, when 3G came in, and a lot of these operators started enabling data on the go. The Android phones came in, so I think the real market started opening up, at least when it comes to gaming on mobile phones, in 2007, 2008. And India has largely been a mobile phone gaming market, right? Because not the penetration of computers or consoles at home was always very limited. So India has always been a mobile first gaming market, which is why it's also been a very casual gaming market.
Yeah. And I think that's where your focus has been as well, right? Over the years, I think building
Correct.
strength there.
Correct.
Interesting. Post that, the 2008 crash, was that really impactful on the way you were building your business? How did you navigate that storm?
It wasn't actually, because I learned my lessons and I had no desire to go through the similar experience ever again in my life. So I was like very focused. Was no vanity metrics, paisa dikhao, cash flow dikhao, tangible business, right? That was my mindset. By the time 2008 came, we had kind of cracked our telco business model, telco gaming model, and we had started making good revenues and good profits. We had also started expanding it to many other countries. So we went to neighboring countries in India. So we went to markets like Sri Lanka, then we went to Middle East, then we went to Africa. So we went to almost 60, 70 countries with the same model, replicating the same model. And that really scaled us. So we had raised some capital in 2005 from Westbridge Capital. Westbridge today has become a very large private equity player in India. And on that, I'll just share another anecdote. Young Turks, which comes on CNBC, just completed 20 years. They were just celebrating their 20th anniversary this week. So I was featured on it on 2005 for the Sachin deal that I spoke about.
Okay.
And Sandeep Singhal, the partner of Westbridge, chanced to see my interview on CNBC Young Turks and reached out to me. And then that's how my funding happened. I that time didn't even know VC kya hota hai. So that's how it happened, and I always believe that's why that any media publicity is good for you. You
Got
can
it.
how you benefit out of it.
Yeah.
So
you just been out there in the market, right? So I think serendipity played its part there.
So I raised only 12 crores from Westbridge.
Okay.
In today's day and age, it seems like a joke, right?
Yeah, it's like a pre-seed or a seed round, I think. $1.5 million.
Now to 12 crores, $1.5 million is friends and family round. I think.
Yeah.
True. But it was a decent amount for me that time, and that's all we raised. But by the time 2008 came, we were very profitable. By the time 2014 came, we had not raised any more capital, and we had about 250 crores lying in our bank account as profits.
Oh, wow.
That we had kind of accumulated. So for us, the 2008 crash really didn't matter because we were busy counting money that day.
Yeah, that's nice. That's nice. Okay, that's very interesting. Just clocking a little deeper into that, what was the business model there? Was it entirely via, the telco communication? Had you figured out maybe ad revenues? What was working for you? Because it's tremendous growth.
No, it was you could either buy premium games. We had partners like Electronic Arts, and we used to distribute for them. And you could buy the premium games for 50 rupees that would get billed to your mobile phone bill.
Okay.
That was predominantly the model, because collecting small amounts of money or microtransactions in those days was impossible, except through the telco channel.
Got it. And I think over years, how has this changed? For example, today, I think in-app purchases, etc.
Today, of course, our business model is far more distributed and diverse, I would say. A lot of the revenues come from app stores. It also comes from advertising. It comes from subscription on app stores. sponsorships. So there are a variety of business models that we operate now.
Nitish, over the years, how important has it been for you to maybe focus? Usually, I think one of the common advice to young entrepreneurs is always like focus on one particular thing. But at the same time, you would keep adapting, right? Like in your case, you would have had to figure out, hey, this is the next best opportunity. Especially in gaming, I think your consumers also always want something more exciting. How has that shaped the way you build products, build business models?
I think the business we operate in, which is gaming or overall tech, but also gaming, it's very fast moving. Yeah, consumer preference is changing, devices are changing, data speeds are changing, expectations are changing, everything is changing. So I don't think you can't be too rigid in what you're doing. You have to keep moving. At the same time, one thing we have been very careful about, it's very easy in gaming to get carried because you have a lot of passionate gamers that work with you, and you yourself are one. It's very easy to get carried away with the latest technology and burn a lot of money there. So I think just to give you example, right? 10 years back, virtual reality was supposed to be the next hot thing. This is 10 years back. Now also it is still coming. Now hopefully it's actually coming. But imagine 10 years back if we got super excited about VR and set up a huge VR studio, we would have burnt money like no tomorrow without being able to monetize it. So I think you have to be very careful that while you keep thinking ahead, you don't get too ahead of the curve where you can't monetize at all. You can have a small R&D team that is keeping on experimenting with new technologies. But for your business, you have to stay one step behind the cutting edge. Otherwise, you will bleed.
Interesting. That's an interesting way. Is that the same thing? Is that a bootstrap mindset, or because usually I think it's okay. Hey, today VC capital. I'm not talking about this current month, but maybe 3 months ago, VC capital is abundant growth at any cost, right? So how do you balance the two of this?
See, it's my mindset because of my early experiences became a bit conservative. That said, I think today, and I often clarify this point whenever I speak to entrepreneurs or founders or youngsters, I think today the opportunity or the market size has become so large, and you have all the perfect macro factors, right? You have huge population having smartphones, you have cost, fast data, you have India is actually very ahead of the curve when it comes to now digital payments. So you have the perfect storm and large opportunities. And then you have the entrepreneurs and founders now having big ambitions, seeing what other founders have done and what is possible. So the animal spirits have also been unleashed. So I think today trying to be very conservative is also not an ideal situation. You have to think big, you have to be aggressive, you have to move fast. And Indian startups can and will dominate the world, I think, right? So in that case, and the other thing is there's so much risk capital, there's so much capital available,
Yeah.
right? And the capital is meant for growth. So I think speed and scale has far more priority over, I would say, short-term profitability. Yeah. That said, if you're burning money without creating value, then it's a waste, chasing vanity metrics. But if you're very clear what you are doing and you are creating moats, you are creating brand, you are creating, value in one way or the other, then by all means you should be aggressive rather than going slow.
Got it. Got it. Can you unlock that bit for us? I think you mentioned vanity metrics a bunch of times. In the gaming context, with what you're seeing around, there is Web3 coming. There's, real money gaming is probably hot today or has been for the last few quarters. What are your thoughts on this?
See, by vanity metrics in context of gaming, I say is if a developer comes and tells me I've got 1 million downloads, that I call is vanity metric because a download doesn't mean anything. And you can spend some money on Facebook and get downloads, right?
Fair.
But if you come and talk to me about what is my D1 retention, what is my D7 retention, what is my D30 retention, time spent in the game, virality, and other engagement metrics, even on a much smaller base of users, I think that is the real metrics and that is the starting real metrics. And then if you've got good real metrics there, it'll follow by how are you monetizing, is your LTV CAC positive, etc. I think that's what I meant by vanity versus real metrics, right? Yeah.
folks, Nazara has been on an acquisition spree. So if there are any gaming entrepreneurs out there, take note of this point. I think it's super important. You never know where you can find synergy. And I see Praneeth and Akshat having come back on stage, so probably time to just shift gears into the last segment, which is 2-3 really interesting rapid fires of sorts. Nitish, over time, it's been 2 decades building out Nazara. What would you say have been the most important tenets, right? It could be perseverance. Is there a playbook to something building long-lasting companies?
Yeah. See, the reality is when I started Nazara, I didn't know what I was too young and inexperienced. I did not know what I was getting into. Had I the foresight of the next 10 years, I would have just packed my bags and gone to do an MBA in the US. Right?
Right.
So that's a reality. It's not like I had all the big vision and all of that. Sometimes it's very easy in retrospective to say, I had this big vision and all of that. Honestly, I didn't have. I did have a passion. I did have a strong desire to do something. And I think in the tough times, we did deliver in terms of tenacity and resilience. Those times for us were very tough at times. We sold computers to pay salaries in 2001 and 2002. So it was that bad. So I think we've sustained over a period of time. What I learned from the lessons, at least for my own DNA, is 2-3 very macro level things which may be relevant to any businesses. One is I hate debt, right? I don't like debt at all.
Mm-hmm.
Either bootstrap your company through your own cash flows. I think the best way of funding your company is obviously your own cash flow. If you're able to create a model which can grow on its own self without even external capital, this is nothing better than that. No, and you are still seeing some examples. I mean, Zerodha is a great example.
Yep.
In recent times that has achieved so much scale while being completely bootstrapped. But if you raise capital, you have to be careful of debt, because debt in good times is good. But as you know, we live in very unpredictable times, right? 3 months back, no one could predict the market situation what it is today.
True.
Right? Nobody could predict such a large Russia-Ukraine war. So nobody could 2 years back predict the pandemic, right? It had not happened for 100 years. So reality is you live in a very unpredictable time. Things move very fast. And companies that load on a lot of debt in such times get exposed very badly. And one thing I've realized is if you build a business that can just sustain and be alive, right, new opportunities will keep coming your way. So as long as you live to fight another day, you will win eventually. So I think the debt is one thing. The other thing is for us, governance, transparency, and right processes at an early stage is very important. And this is something I learned in 2005, 2006 when Westbridge actually pushed us to bring in ENY as an auditor. They were such a small company, and I kind of pushed back on why do we need a top 4 auditor. It was very painful, if you ask me. And they said, it'll help in the future. And when we went IPO, we realized that our processes and governance was set so strongly over a long period of time that was impossible to do in a year or 2 years' time. So I think today in India, even for startups, compliance is, statutory filings, etc., become so critical. If you miss it, either by error of omission or commission, you will have to keep paying for it monetarily as well as by time, right? So I think startups should really focus a lot on those aspects and keep them extremely clean. And the third macro level thing is, I think, for founders and startups to have a very, very positive mindset on everything here. Because I've seen my experience of so many years, wherever I've taken any action which has come out of negative thought or anger has always failed miserably and backfired on me. Whereas even in the toughest times when you have taken the positive path, it has been very successful. And that's why in Nazara, I'll say 20 years of history, we have 0 legal cases history, right?
Interesting.
Not easy to achieve. And many times we've left, money on the table. We've thrown ego out of the window to solve things. But it's allowed you to have a good night's sleep and come back charged up the next day to, give your best again.
Got it. Nitish, this was probably something that would have covered my last question as well. So I'll tweak it a little bit. Last question going into this discussion. long company, stressful hours, building this out. I think lots of early founders don't talk about it. It's not talked about as much. But how does Nitish deal with everyday stresses of running a high growth startup? I would still call it a startup, even though you're a public company, but a high growth company in general.
Yeah. Firstly, now, after a long period of running a business, I think you don't take that much stress anymore, right? Things will happen and they will keep happening, and it's a cycle, right? And it's not you don't everything happens and then passes by. So I may sound philosophical, but that's a reality. I don't really take that much stress. But what really helped me in the earlier stressful times and even now, I really pursued other passions beyond my work. So I was always fond of music. I picked up the saxophone when I was 16 or 17. It was quite late actually to pick that instrument, but I've been part of a jazz band for the last 25 years. Play in a lot of South Bombay clubs. I still practice on the weekends, so that's a great de-stressor for me. So I think uh, one thing I must say, because there might be many founders or potential founders hearing us today, I think one thing that's very important now for startups and founders is to prioritize their health. See, the early stages of startups is very stressful, no doubt about it. And I think only a fit body can house a fit mind, right? Which is strong enough to take on these stresses. So I think that's one thing, that if the Indian founders and teams can also prioritize their own fitness, physical fitness, I think that will go a long way in indirectly benefiting the businesses.
That's interesting. So hopefully, maybe we'll see more interactive games coming out from the Nazara team along these lines. But
Yes.
Nitish, it was a pleasure to host you today. I think Pranit and I'd love to go deeper into this for hours together, but I think Pranit and Akshat are giving us the start. But thank you once again for joining us today, Nitish. It was a wonderful, wonderful chat today, and looking forward to everything that comes out of the Nazara stables in the near future.
My pleasure. Thank you for calling me.
Thanks for Over to you, Pranit. Over to you, Akshat. And thanks everyone for tuning in. It was extremely wonderful.
Thank you so much, Suhas and Mr. Nitish. Thank you, Mr. Nitish, for sharing such a comprehensive perspective on the gaming industry in India. I'm sure that Nazara Technologies will go on building great products and provide a source of entertainment for years to come. So let's move on to our next session, the Dotcom Decade.
So the turn of the century and the IT boom did not just see the expansion of concepts and industries conventionally related to technology, but rather the introduction of new ideas into the internet space. With incredible ideas which allowed digitalization of industries that relied very heavily on in-person aspects of communication, investors saw immense potential in internet-based businesses, and investments began flowing into these ideas.
It is our pleasure to introduce Ms. Dipti Tandon, founder of Jeevan Sathi and coffemug.ai, a startup which has raised $625,000. It is in pre-seed round led by Paramdeep Shift Capital and AngelList India. She was also part of the founding team of Magic Bricks, an IIM Ahmedabad graduate. She has a dominant presence in the ecosystem and has played a significant role in its evolution.
Joining Ms. Tandon, we have Prapti Patel. Ms. Patel is currently an investment associate and program manager at Angel Ventures. A graduate of Ashoka University, we look forward to hearing her insights on early stage startups. I would now like to invite Ms.
Go ahead, over to you, Prapti.
Thanks very much, Pranit. Hi, Dipti. I'm so excited to be able to do this session with you. I've actually used both jivansathi.com and Coffee Mug. So this is almost like going behind the scenes and having a conversation with the brains behind the product that I've used and used quite intimately. Actually, Coffee Mug, I'm yet to I think reap full benefits of it as I've just joined the platform last week, but I'm super excited for this. Thank you so much for joining us for the session. We really appreciate it.
Thank you so much, Prapti. Very, very kind words. And I love it when I see happy users.
So Dipti, if we could just have a very quick introduction from you, right? I'm sure our audience already knows so much about these products that millions of people in India have already used, especially your earlier ones. But if we could hear in your own words a little bit about yourself and your journey, and then we can get started a bit on some of the deeper questions we have today.
Sure, Prapti. So I'm ancient. I passed out of IIM Ahmedabad 1991. Started my career with Titan. Due to certain family reasons, had to move back to Delhi, and I joined what was then Beecham's, Horlicks. And in 2 years, I figured while the work was good, you were like a tiny cog in one big wheel, right? Big wheel, and you were doing these Katori Chammach promotions, right? And I figured this is something I didn't want. And I think it was late 90s is when one figured that I want something more than that, and I want to do something of my own. Unheard of at that time. Nobody knew what a startup was all about. My own mother thought, I'd been kicked out of my job, and she tried to tell people to reason with me. But that's how Jeevan Sathi started. Okay, knew nothing about either coding or online or anything, and we were bootstrapped. Obviously, we had no money. But somewhere there was a foolish confidence, or whatever you call it, that kuch to ban jayega, something we'll do. Started as a hobby and didn't even realize when it became something big, because it just seemed a very, very interesting problem to solve. And nobody used technology to solve problems those days. And that's why we did it. Had seen Naukri's success, and hence the next natural step to me seemed matrimony. As simple as that Naukri lag gayi, to then people will want to, if Naukri ke liye solution hai, so for marriage. And was a fun-filled journey of 7 years. And then the larger players came, who spent equal to about what I spent in 3 months, they spent in a day. And we realized it needed money to grow and sustain. That's when it was acquired by InfoEdge, the Naukri.com group. Post that, all I knew was to scale, you need money. And that started a 10-year journey with building magicbricks.com for the Times Group. Fun-filled 10 years, small projects after that, and then Coffee Mug. So I'm just not the corporate types, I guess.
Well, that's great for us and for the rest of India, I suppose, that every once in a while people come along who absolutely have to do something on their own, and they end up creating products that everyone uses. It's so interesting to talk to you, Dipti, because as a founder, you have seen potentially the entire startup journey, what we now call, startup 1.0, 2.0, and now we're at 3.0 with like the Web3, metaverse and everything. You've actually seen that entire transition. And it's so interesting that, some of the things that continue to endure, especially in the context of the products you have created, is connections between people. Whether that's for someone who wants to get married or wants to move forward in their career or wants to find a house, right? I think the point remains the same, that we're all looking for easy solutions and to trust the person on the other side of the screen. And I think that building for trust is one of the most difficult things that even founders today are trying to solve for. So this is a really interesting conversation for us to have. So Jeevan Sathi was built at a time when, like you have also said, the internet was really nascent. Nobody really knew what was going on, if it could be used for something productive. And you were able to identify like a trend, right? Like even if Naukri came before you, to have that conviction to kind of go after what someone else was doing, in the sense of like adopting it to another market, right? So what do you think helped you identify that trend? Like today, in an age also when so much information is available as opposed to maybe 20 years earlier, what can founders do to tune out the noise and focus on the trends that really matter?
So the way I look at it is, I think be very early on in the cycle, which also means you have to have a lot of belief, because everybody around you thinks that what you're talking is not going to happen. Like I said, it was as simple as that, and it wasn't that Naukri was a big giant, right? They possibly got their first funding, but you could see it being successful. And what was a problem which was as big, right? A problem which had scale, where you could build something which could be used by a large number of people. At that time, I didn't think in millions and crores, but that's, that was a thought. And the next natural, honestly, the next genuine step was matrimony. And the thing that propelled me to do it was that there wasn't a solution which existed in India. And in US, you had, that was not the Tinder era, but the Match.com era. And you had Match.com and all, which was doing well. And so there was a confidence that if you do this, someone somewhere will use and, it'll kind of start something. Always knew that early in the cycle, it's going to be an early adopter, right? And you knew that, NRI marriages, right? I think one of the earliest adopters of the matrimonial sites in India were the NRIs. And a lot of the earlier features of the products were, built specifically around that. And over a period of time, I think over the next 3 to 4 years is where, you started going to the Indian cities. So it was large problem and a parallel something somewhere using that technology, but not solving this problem. And that's the same, and nothing existing in India for that.
Right. So that makes sense. So like a whole lot of conviction, the understanding of, what does exist in the market versus what does not. And then logically what makes sense given people's lives more or less remain the same, whether that's 20 years ago, 40 years ago or today.
Absolutely.
That's great. I think the simplest answers are often the most useful ones. So, again, given that you have, as a founder, seen, I think, a whole bunch of ups and downs now, a few economic cycles going up and down, a couple of different shakeups in the world economy, we are in the midst of a very clear funding window, right? So, what would your advice be, from the perspective of someone who's seen this happen a lot of times? I think maybe first-time founders currently would be like very, very stressed out. So what would your advice be to founders like that?
So I think capital always needs to be very, very dear to you. Okay. And work tight. You are a startup. Don't forget. So what a large company will do with 5 people, you jolly will do it with 2 and 2 smaller ones. So never forget that for you, capital will be tight. What is there today may not be there tomorrow. Ensure you have an 18 months runway come what may. If you don't have an 18 months runway and you're operating with the 3 to 4 months runway, you're not going to be able to do anything right. And so for that, prioritize. Now, if I'm saying that use limited part of what you have, prioritize. Please figure out of the 10 things, what are the 3 which must be done, and do just those. Then you can manage with that capital. And contrary to many people who think that first think scale, then think revenue, I'm a believer that do keep your eyes on revenue, because figure from the beginning what you're building, how is it finally going to make money? Otherwise you're going to end up with something which may be great used by a large number of people, but finally it may not be a viable business proposition. So treat capital as dear, prioritize, try to keep maximum runway, and see if some revenue can be done at least your cash flow.
That makes a lot of sense. I think focusing on business fundamentals has really come back into the picture after some crazy valuation and metrics in the last couple of years. So it's good to know that, that kind of thought process endures multiple such cycles. So in terms of, like a down cycle or a crash coming up right after starting up, that did happen around the time that Jeevan Sathi started as well, right? So specifically, what did you do in the company to, be able to deal with it and ride the wave through as we now know that you have?
So in fact, the down cycle came as soon as we started, right? So there was this first bubble which was there, okay, which kind of tempted us to start, but just as we got going, came the downfall. I think it was that now you were in it, there is no out, and failing is not an option. And once you decide that failing is not an option, my belief is you will not fail. Back to the wall, you will run yourself in the tightest fashion and you will come up with solutions. The best solutions will not come in easy time. The best solutions will come when you have your back to the wall. So we knew we don't have money. We knew we'll have to do all the work ourselves. So it was literally, there was one person in tech, and there was me figuring out. I learned I knew nothing, right? So I learned the basics of HTML. I learned some basics of C++, so I could copy paste, run some code, something. But you kept it going because it was a funding winter. It was not a user winter. So you knew that if you got the user and you figure how to make them pay, you will see this through. And I think all the years of Jeevan Sathi finally ran. So we did obviously had to put in some money, but I think, so the first 1.5 years is when we, I think, put in money. And but we ran very, very tight. And we'd set ourselves a deadline for going paid. And so after that, funding didn't matter. Whatever we could, we never, you need to learn to live tight, Prapti. So, because whatever we made went right back, right? It wasn't that you could draw salaries and this and that. Obviously, the team drew salaries, but you worked very, very tight, put everything back in the business with the belief that, like I said, failing is not an option.
Understood. And in terms of, specifically any business model or revenue model shift that you all made at Jeevan Sathi at that time, or was it just like an overall getting all resources together?
So Jeevan Sathi wasn't paid at that time, right? That was very, very early days. We were figuring out the services. I think what that made us do was that how quickly can we go paid? So I remember experimenting with some paid services within 6 months of launch and realizing very early that, bells and whistles are not what people will pay for. And making that change from value-added services to the core piece of potential brides and grooms connecting with Ajam, making that paid. I think that was a transition which we made, we learned. But Prapti, at that time, I never knew you could raise funds. So it was as simple as that.
Yeah, essentially, like you said, back to the wall, you all knew you had to make money. It wasn't that we want to go to a funder and raise funding and that will take care of all of our problems.
Nothing would have, we knew we will never shut it down. And we knew we didn't have that much money. So very simple. It had to pay for itself somehow.
Understood. So Dipti, as a founder and as an investor, you have now been part of this ecosystem, right? And, in 2020 and 2021, we've seen like that insane growth of, whether that's the number of unicorns or the kind of funding that the startup world has seen in India. So what do you think accounted for that? Because I think we've seen a lot of analysis as to why this crash is now occurring, but not enough people are able to explain why we went so high in the first place. So what do you think was behind that?
So I personally think, one, there was this tremendous increase in adoption. Okay, so whether it is digital payments, whether it is grocery, whether it is plain vanilla e-commerce, everything suddenly went digital. I don't think technology's been so much at the heart of the entire economy as it was as it became then, and it was suddenly visible that without technology you can't survive, and all tech products saw adoption. So to me, that was that was one big shift which happened. Meeting people went online, right? So I also believe a lot of even funding, investment, or whatever kind of conversations or networking used to be very restricted to physical meetings. I don't think there were any boardroom meetings or anything like that which was which was not physical, right? And suddenly so there was the window of opportunities opened, the window of givers opened, the window of users became big. People took, even though it was tough times, I think this was a time people decided whatever I've not done till now and I want to do, I should do it now because there may not be another time. So there was suddenly this, repeat 2x, 3x kind of entrepreneur sitting in front of you like yours truly. So there was this thing that you must do it now. So I think some of these factors put together caused this big surge and confidence on the investor side, increase of numbers of investors, meetings, etc. And I think these 3-4 things definitely contributed big time to having to creating that boom, which today is rationalizing.
Understood. That makes sense. So a number of different factors, I think, have gone into it. So Dipti, I understand that you have a hard stop, and this is a really exciting conversation that I could go on to have with you for a very long time. But I'm just glad to have had this opportunity to, be able to ask you these questions and have this lovely audience here with us, who I'm sure has also benefited from this. So thank you very much for your time. We really appreciate
Thank you,
it.
Prabhu. Thank you so much. Thank you. Thanks, guys. Thanks.
Thank you so much, Ms. Tandon. Thank you so much, Ms. Patel.
So, Pranit, are you guys from BITS Pilani or are you guys students?
Yeah,
Yes.
we're first year students from BITS Pilani.
Nice. Okay. Which field? Okay, go ahead.
Yeah. Our next session, titled From Cryogenics to Theatres, explores the position of the INOX Group across different sectors. We are joined by Mr. Siddharth Jain. Mr. Siddharth Jain is a member of the board and an executive director at the INOX Group. Siddharth joined the group in 2001 and has been actively involved in the group's strategic planning and business development initiatives. With a degree in mechanical engineering, he's an alumnus of the University of Michigan at Ann Arbor and has an MBA from INSEAD. He's a member of the World Economic Forum at Davos and has been honored with the prestigious Economic Times 40 Under 40. Moderating this session, we have Mr. Zaran Bhagwagar, who is currently an investment associate at Anthill Ventures. He leads Anthill endeavors in Southeast Asia. Mr. Bhagwagar has diverse experience under his belt through his work in the venture capital sector. I would now like to give him the stage to commence the session.
Thank you very much. Thank you very much, Akshay, and congratulations on being the first host to pronounce my name correctly on the first try. Folks, cannot be more excited for today's session. The gentleman today that we are talking to is Mr. Siddharth Jain, and very few people in our country have his set of experiences and his set of wit. So with that, Siddharth, people hear INOX and immediately their mind goes to the fantastic popcorn in the theaters, right? But INOX Group is so much more than that. So before we get into your experiences, it would be great if the people here in the audience learn a little bit more about the activities undertaken and some of the things that you do at INOX Group.
Zaran, thank you so much for having me here, and I'm super excited to be speaking to all the students at BITS. I'm, of course, an engineer, so it's even more exciting that I get a chance to speak to other engineers. It would be great if we could have communicated with them in some manner, but all the same, you can be their window to asking questions. So the INOX Group, as you very rightly said, is most well known for the cinema business, but the word INOX is a short form for industrial oxygen. That's where the name comes from. So there is always a connect with engineering and science somewhere or the other. And we started our first manufacturing back in 1963. It's been 60 years, and our principal business is that of manufacturing industrial gases such as oxygen, nitrogen, argon, hydrogen, and many other gases, which we supply to a variety of industries all over India. Pretty much every manufacturing industry in India requires industrial gases as part of the process. So we started in 1963 as industrial oxygen, and which then got converted to INOX Air Products. So that's our flagship company and our first company. The second one that we have is called INOX CVA, which is once again engineering related. We manufacture capital goods for primarily cryogenic vessels for storage and transportation of low temperature products like liquid oxygen, liquid helium, liquid hydrogen, anything below minus 100 degrees centigrade. And we design, engineer, fabricate, and we also export to the entire world from here. So we are the world's third largest manufacturers of cryogenic equipment. And we've been in that business for about 30 years now. And finally, of course, is the movies, which we started in 20 years ago. In fact, exactly 20 years ago was when our first cinema started in Pune in 2002. So we are celebrating our 20th anniversary. And the rest is history. We are now in about 70 cities across the country as a cinema business, serving almost 70 million people every year who just come to INOX. So that's a little bit about us.
Congratulations on 20 years. Startups talk about crossing the chasm and seeing that they've gone at the distance at 5, and we've had multiple businesses cross the 20-year mark. So fantastic. Times are difficult, but I want to turn the clock back to a different time. I want to go back to when COVID was just announced. Every business during COVID has its own little war story, right? Everyone is talking about what happened during COVID, but you have multiple stories to tell. Because I heard oxygen, which back then was such an important word, and then I also heard cinemas. So two diametrically opposite industries and two diametrically opposite stories to tell. So in your own words, what happened during COVID and how did the INOX Group really manage?
So, I think you put it so well, two diametrically opposite experiences at the same time. I don't think there's any industry in the world that was impacted as badly as movie theaters. Honestly, I mean, you can take other public places like restaurants, hotels. I mean, restaurants were doing delivery, hotels were, they were doing lesser business, but they weren't shut down. And historically, I've yet to hear of a business which has been asked by the government to shut down for an elongated period of time, up to a year. And when COVID first began in March 2020, if you go back in time 2 years ago and think at that point in time, it was like Armageddon. You didn't know whether this industry would ever begin again, because one would think that, it's the virus and it's just going to spread and going out, is forever finished. At the same time, and we had 10,000 employees in that business, operating all over the country. And overnight, we were asked to shut down and 10,000 people were out of a job or didn't have to go to work every day. And handling that was an extremely difficult crisis. And, it's something that a lot of the, today, the fancy word of startups, everybody talks about cash burn. And this was true cash burn. This was your shut down cash burn and you couldn't do anything about it. So handling on one side, 10,000 employees without a job and cash burn. And on the other side, we're in the oxygen business. And keep in mind, that we were supplying 60% of India's medical oxygen, 60. We supply to 800 hospitals across the country, across 24 states. And all of a sudden, there's a time when you're receiving calls from all 800 hospitals at the same time that we need, in some cases, 5 times more product, in some cases, 10 times more product than they would take normally. And it's not just one hospital, it's 800 of them in 24 states. And Zaran, that experience of, focusing on saving lives versus focusing on saving your business on the other hand, there is no choice. You have to choose saving lives, and that's where all our time went. But it was a tremendous challenge, and I think to the community out there who is looking at it as startups, when you're put in a position, all I can say is everybody will find a way to get an answer when put in a position of responsibility to save lives. We will all stand up. We will find a solution. And that's what we did. And we're very proud of what we did. At the end of the day, I think India faced, the worst brunt in the second wave in April, May last year. And I hope none of us ever have to see that again. But, tremendous learnings, handling. That was one business where each employee was forced to come to work every day, even though COVID was on. And in the other business, all employees were told, you're out of a job. So, two diametrically opposite situations. And, full credit to my team of 2,000 people in the oxygen business who, regardless of COVID, came every day to work in the past 2 years. There's no work from home for oxygen. I can't sit at home and make oxygen. So you've got to be at the factory. To our 700 transport drivers, our guys who drive the trucks and take the oxygen to the hospitals, people were running away from hospitals. And here we had our truck drivers going to the hospitals, to the hotbed where it was going on. So managing our employees and keeping up the morale at a difficult time when people in their homes were affected by COVID, but still had to work. And on the other side, managing people without a job and cash-strapped business was certainly got some white hair, but some good white hair. I think that was some good learning.
No, we can definitely hear the passion in your voice, and I think I speak for everyone in this audience when I thank you for what you've done for not just the country, but for people that needed it when they needed it the most.
Thank you.
You mentioned that there were a lot of lessons learned, right? And a difficult time. When a business goes through such difficult time, let's take the cinema business, because I think that is where you mentioned gray hair, and in the market today, I think a lot of gray hairs are spouting, right? what was the big takeaway for you, or what is something that you would really like to underline for some of the people in the audience today as to how your team managed the crisis?
So, the first thing is the human connect, because there's no business without people. You have to understand the pain both from all your stakeholders, including the company itself, your employees, your government relations, other people. Once you learn to think from somebody else's perspective, you'll easily find the answer, or you will understand the need to put all your cards on the table and have a mature conversation around it. There's no running away from having a mature conversation. We had to let go, out of our 10,000 people, we had to let go of 8,000 people. That wasn't an easy conversation. And for the 2,000 people that stayed, they all took haircuts of almost 50% of the salary. In spite of all that, we still had to dilute our shareholding in the company by 10% so that we could get an equity infusion. So, but the key takeaway for me is, although back in March 2020, April 2020, we didn't exactly know how long this was going to play out, we had a fundamental belief in our business. There are other people in the cinema industry who did shut down permanently, not only in India, but globally as well. That wasn't an option for us because we had a fundamental belief that, look, this is a hard time. We have to go through it. Now, once you agree that you have to go through it, you got to find the money. So a big, and here's another lesson for everybody listening in. We had a huge advantage that we were publicly listed. Because we were publicly listed, it gave us access to capital very quickly, in 30 days, in 45 days, because you can do a QIP. If we were private, so I remember us, even while we were publicly listed, we called up banks to lend us money during COVID. And not a single bank was willing to lend a company like INOX any money at that time. And the answer they gave is, we cannot lend money to an industry where there is no sight of future revenue. So now you're in a position where no bank is willing to lend you money. And you got to put in your own capital. And luckily we were publicly listed. So we went out to our shareholders and I thanked them for showing faith in a shutdown industry and still putting in money. Had we been private, like many of my competitors were, not only in India and globally, they had no access to capital. They couldn't go to a bank. All they could do is put in their own personal money. There was no private equity fund who was going to put in money at that time. And so they shut down. So the lesson to a lot of the people who are in the startup community, and while being publicly listed is difficult at times, there are huge advantages of it as well when the chips are down.
Well, that's very interesting. And speaking of investment, and that time, I'm sure the team was watching with great interest as to what was happening with AMC back in America. But let's talk, media is something that Anthill and INOX both align on. We're the first media tech accelerator in the country, and that obviously leads me to a question that we think about all the time here at Anthill, and I'm sure everybody else would love to hear from you. What are some of the media technologies that excite you? What are some of the trends in the media and internet entertainment space that INOX has an eye on, or you personally find exciting?
So, I've been asked this question multiple times of OTT versus cinema and things like that, and generally technologies. The first thing people must understand is actually OTT and cinema are complementary to each other. It's not against each other. It's the way you had television earlier, or you had just the internet in general, whatever. Each technology is complementary. They don't take away from each other. I have a fundamental belief in the movie watching industry. For it, the way we are transposing it is for it to become experiential, not for it to be purely, as a simple consumer. You have to experience it, which is our tagline. You have to live the movie, right? And that's INOX Live the Movie. But we are investing heavily in new technologies at the theater level. So whether it's in ScreenX, which is a 270-degree viewing where you feel immersed in the film, whether it's MX4D, where you've got 15 kind of, things that, you've got snow, you've got rain, your seats moving, your popcorn's getting wet, your popcorn's falling off. It's really, and movies like Jurassic Park, Top Gun, etc. It's great fun watching films in that. And of course, you have IMAX, we have our luxury cinemas. So you've got to convert the movie watching into an experience. And the famous word that we use, we keep thinking of decouching. How do you pick up a person from the couch and bring them to the cinema? And that's what drives us every day, decouching. So when it comes to future media and entertainment technologies, I think getting content to more users has a great job has been done by the OTT players. In spite of OTT growing in size, the cinema industry as well is growing in size. We've just had a historic month, a historic 3 months. We've had, KGF 2, RRR, all crossing 1,000 crore box office. At the same time, OTT is doing fantastic as well. The quality of content has improved. More money is flowing into content creation, which is, making better stuff, which is good for the theaters and is good for OTT as well. So I feel going forward, people, all your audience, everything is not about technology. At the end of the day, you have to think like the consumer. It's the experience of consuming the product, not just the product.
I love that, and I think it was Elon Musk that said that there's something magical about a shared experience in a theater.
Yes, he just did say that.
Yeah, so it's very interesting. Let's talk about theaters, right? There was a blockbuster merger. We can't have a conversation without talking about the merger. Yeah. Tell us about PVR. Tell us about the merger. Tell us, what does the future hold for Indians looking to watch a movie at what is now the greatest entertainment property in the land?
So certainly it is a very, very exciting time for us. And, we are so gung-ho on the future of the cinema business in India. So both PVR and us have been, the two real iconic brands, which have been in India now for the more than 20 years. PVR has been around 25 years. We've been around 20 years. And, we found no better time than post-COVID. We are a COVID baby, literally. We wouldn't have been here had it not been for COVID. So we can thank COVID for something. That we realized that coming together and multiplying our forces to get into, newer domains and do bigger and better things, and not only in India, globally as well, is the need of the hour. We're going to have about 1,500 screens. India has about 9,500 screens, and together we'll have about 1,500 or 1,600 screens. And more than that, it's about how both of us have a shared philosophy on giving the consumer the best experience. Because if you don't give the consumer the best experience, you're going to lose the consumer. He's not going to come back to you. So you've got to keep focusing and investing on that. And, I must tell the audience that you have to differentiate between cash burn at the CapEx level and cash burn at the OpEx level. Not to be confused with each other. Cash burn, you can burn cash in CapEx, but never burn cash in OpEx, right? And I feel it's too fancy a word that people are, they're constantly using about cash burn. But anyway, back to the merger, is that our entire synergies have to come into play. You have to be profitable. No business can survive if you're not going to be profitable. So we feel extremely excited about the future, and I think it's going to hold great things in store for us and for our country. You must realize India has the highest movie watching population on earth. We have almost 2.5 billion people watch movies in India, which is double that of China. And so strong. And if we can help take that soft power to the world, why not?
I think it was the invention of the Indian diplomatic force that used Indian cinema as a trade deal versus South African wine many years ago. So fascinating to hear that from you. Let's move into a little bit more of a quick fire round, given that we're edging closer and closer towards the deadline, Siddharth. There are a lot of startup entrepreneurs here listening to you. They've heard about the breadth of the INOX Group. And a lot of them would now be very, very excited to see, how can I work with you? How can I partner with you? So to the audience out there, how does the INOX Group work with startups? How do you engage with early tech companies? Would love to learn from you over there.
So, the middle word is tech. And that's one thing we love, regardless of all three of our businesses, whether it's cinema, whether it's, oxygen, or whether it's the capital goods. And especially in the capital goods side, we're working a lot with global firms in fusion technology for, at CERN, for the accelerators, for the LEGO project, for gravitational forces, with in the space industry, with helping ISRO, for the engine design, cryogenic engine design, whether it's the launch pad. And we are more than excited to work with any company connected to any of our businesses, and we do frequently. We have startups in food as well. The new fad is what do you call it? There's plant-based meat.
Plant-based meat.
I'm vegetarian, but still, it's that plant-based thing, and that's a new fad, and that's a new startup. So tech isn't necessarily only like literally tech. It could be anything new, and we would welcome to work with, and we do work with lots of startups in across the board in technology, whether it's in cinemas or otherwise. So would absolutely open to doing that.
That's amazing. Everyone, please hold him to that. Siddharth, what are some of we touched upon media, and that was more from the lens of the theater business. Let's put that to the side. Personally, what excites you? What technology do you think that can come out in the next 5 to 10 years as the next big thing?
So I think what excites me most is Elon Musk, right? That's like at the top of my list, and everything that he does. But having said that, what would I give up everything for? I would give up everything for space. I think nothing is more exciting. And it might be sounding childish, like a kid who wants to be a pilot, right? And maybe it is. But just the concept of understanding space and the technologies around that, and what can be done, magnetic, just gravitational. What excites me is physics, personally, and things associated with that. So I'm sure the tech guys out there, if you've got anything physics related, I would say focus on that, or focus on anything where you feel your curiosity level will be more than somebody else's. And that's truly a differentiator, between being successful and not, is picking an area. And everybody doesn't have to be an entrepreneur. You can pick a subject within a company, but where your curiosity is greater than other people around the world. And just as long as you're curious, you'll find the answer.
I think that's music to an engineer's ears. I think last question before we sign off, Siddharth. A lot of people here that are now dreaming of starting their own company. Lots of BITS kids have already begun their startups. We're very, very proud of what BITS has done in the past few years. I think they call themselves the BITS Mafia. What advice do you have for budding entrepreneurs or students that are now considering on embarking their own journeys?
So in continuation to what I just mentioned about curiosity, you have to be curious to begin with. About the product, whatever the product is. The second point I would say is, think of a product or a service that the consumer actually needs. And when you kind of, a product or a service that kind of doesn't exist today, or you're trying to, really reinvent the way something is done, focus on the consumer, focus on your eventual, buyer, and then work backwards, right? Try and think like the consumer. What is it that the consumer wants? It could be a digital product, it could be a physical product, it could be anything. Find out where the need is. I haven't seen too many businesses successful where it's a bottom-up approach, when I think of a product and then you design it and then you try and sell it. I try and usually think of what does a consumer need, even if they don't know about it today. And if you think like that consumer and work backwards. So once you've figured out your product, that's great. But once again, the word startup has been abused by too many people. Being a startup does not mean you have to lose money. Being a startup means you have to make money. And just too many people keep thinking about where do I go and get money and pitch to someone that for how many 10 years am I going to keep burning money? No, tell me how soon you're going to earn money, not burn money. And you can have a concept of burning money for CapEx to invest, whether it's investing in a technology, in servers, in engineers, in code, in office, in people. That's investment. Once you've invested, your product must make money. You cannot cash burn on OpEx. And I think the last point I want to make is, don't be under pressure to become an entrepreneur, right? Everybody, I think Indians in their blood do have it to be entrepreneurs. There's no doubt about it. But listen, let's be honest. Everybody can't be an entrepreneur, right? And all of you have a dream of $1 billion check. Everybody that people take $1 billion checks to burn money. I think we have to, this concept of funding winter and all this kind of stuff. You should say, I want to give money. I want to earn money and give money, not take money, right? So I would just tell entrepreneurs that, listen, don't feel that you're a failure if you haven't founded a company. If you're a BITS Pilani engineer, you can join other people as well as a partner entrepreneur. You don't have to necessarily be the founder entrepreneur. You can find a company, a service, or a product that you love, and you can say, what, I think this idea is great. I'd like to join that person, rather than saying, oh, I have to invent something myself. So don't be under so much pressure that you have to feel you need to really invent it yourself. Join someone and build a great company with them.
Siddharth, thank you for the conversation, for the movies, and most importantly, for your contribution in saving lives. It's been an absolute pleasure. Cheers.
Pleasure's been all mine, and thank you so much for a lovely conversation.
Thank you, Mr. Jain. Great conversation. A lot can say.
Thank you, Mr. Jain, for invaluable words and knowledge. It was inspiring to hear the story of how the INOX Group dealt with the COVID-19 pandemic and came out stronger with the INOX PVR merger. Thank you so much for joining us. We would like to offer our audience a reminder that registrations for Conquest are open till the 14th of June. To register, head over to our website, conquest.org.in, and click the registration button. Once again, that's head over to our website, conquest.org.in, and click the registration button. On to our final session for the day, through the eyes of a venture capitalist.
The India Portfolio Summit was named with the thought that if we looked at India as a VC firm, what would be some of its greatest achievements? What are the companies that define India and are synonymous with the idea of the India portfolio? Our next session moves on to the onset of VC involvement in India in the early and mid-2000s. The session aims to track the journey of VC investments in India, exploring the effect of the COVID-19 on startups, and the recent boom of unicorns in India. Our last panel for the day, titled Through the Eyes of Venture Capitalist, is graced by the following speakers.
Our first speaker for this panel is Mr. Nilesh Kothari, an alumnus from BITS Pilani. He is the co-founder of Trifecta Capital, a new age platform for startups. Trifecta Capital pioneered venture debt funds in the country in 2015, and today are the largest such fund. Having provided over $270 million of venture debt to 70+ startups, Nilesh previously served as Global Managing Director at Accenture, and led several large acquisitions and investments for Accenture across the world.
Next up, we have Mr. Akash Srivastava. Mr. Srivastava is an IIT Delhi and IIM Ahmedabad alumnus. He is presently working as a principal at Elevation Capital. He primarily focuses on B2B commerce and SaaS startups. He has been an integral investor in startups such as Spinny, Vigro, Nanonets, and Cap K12. Prior to this, Akash was a consultant with McKinsey, focusing on financial services, pharmaceuticals, and healthcare clients.
Also joining us today, we have Mr. Shashank Randev. Mr. Shashank Randev is the founder VC at 100x VC. Shashank brings entrepreneurial and investment understanding with 15 plus years of cross-functional expertise. He has been the founding member for a SaaS startup, which was acquired by a Fortune 500 company, to an early stage fund investor in startups such as BlueLearn, StyleNook, and the Renault Project.
Last up, we have Mr. V.T. Bhardwaj. Mr. Bhardwaj is an IIM Ahmedabad and BITS Pilani alumnus. As a partner at A91 Partners, Mr. Bhardwaj has led investments and is a board member at several successful companies, including Go Colors, Indigo Paints, and HealthCard. We look forward to hearing his insights on investment in early and growth stage startups.
Moderating this session, we have Mr. Sahil Makkar. Mr. Makkar currently serves as Vice President at India Quotient, an IIM Bangalore 2017 alumni. He has previously worked at Trifecta Capital and Goldman Sachs. We look forward to hearing his thoughts on venture debt and growth equity. Join us in 2 minutes as we set the stage for our last panel discussion. Presenting our panelists for our last session of the day through the eyes of a VC. Over to you, Mr. Sahil, to take forward this conversation. Looking forward for a very insightful discussion.
Yeah, pleasure is mine and glad to be sharing stage with some of the most renowned faces of the ecosystem, as well as my ex-boss, Nitish. So maybe starting with VTU, given you have been a part of the ecosystem since late 2000s, 11 years at Sequoia, how do you think at least till 2015, the ecosystem has evolved from a investor perspective, at least India becoming a market which can't be ignored, as well as the founder mindset? Say, when I graduated, at least I saw in 2012, few of my batchmates at least talking about entrepreneurship. So just from your eyes, that time, how did it look?
Yeah, no, I think it has evolved a lot. And I think when you think about it for a panel discussion like this, you suddenly realize how much things have changed. So I think the big change, and I joined investing in 2007, it was still a relatively early ecosystem. And capital was coming to India, but mostly for the private equity style investment. Even then, private investing itself is a very, very new industry. And I keep reminding people that when people point fingers and I talk about the mistakes we made by the ecosystem, that net it's a very, very young industry. It's a less than 15-year-old industry in India. And it's kind of grown in fits and starts in terms of both the amount of capital available, the amount of talent available, and also in terms of just the nature of opportunities which people are trying to kind of focus and build companies on. And all of that has changed. I would say the starkest and the biggest change is in the type of the entrepreneur who is now starting the business. And that was very different in India of 2007 to 2010. And I would say 2011 is when at Sequoia we started investing a lot more in younger and earlier stage companies. And the profile of the founder, right, which is first generation founder with sometimes without experience, it could be fresh out of a college, sometimes with meaningful experience, it could be 10, 20 years. And I think something has changed because of which over the last 12 years, as I see it, you are seeing a lot of first generation founders. And just to give you the magnitude of that, I would say, we raised our first fund in 2019 and that fund has 14 companies and 13 out of the 14 are first generation founders, right? And the numbers are staggering. The extent in which the pendulum has shifted away from, let's say, capital going to a existing promoter group company or a promoter company or something like that. It's completely changed, and that is the first and the most profound change, because I think what that is allowing those founders to do is to kind of build businesses very differently from, let's say, how the older generation business families would have built businesses. And I always think of it as the modernization of Indian capitalism is a very abstract way of putting it. But that is what you see starting to happen in 2011. I think that trend has only become firmer and stronger because that trend has gotten supported by two things. One is willingness of talent to work for young companies and willingness of talent to consider young companies at a relatively earlier stages in their life. Someone earlier, if you were joining a wonderful company like Unilever would say, there are always going to be people and there have to be people who will build those large companies and take them to bigger places. But you're seeing a reasonable cohort of high quality people who spend 10, 15, 20 years saying, hey, you know what? I've done this. It's exciting, but I want more excitement in my life. I want to do something different. I want to leave a mark on the company that I've been a part of. So one is a founder saying, I want to leave a mark in the country that I have been in. And then there's a talent which is saying, I want to leave a mark on in my life and career. I want to be able to say I was a part of something that got built. So the talent, I think, has learned to embrace younger companies much more, profoundly more over the last 10, 15 years than it ever was, in 2011 and 2007, especially when I started investing. The third has been the availability of capital. Look, and capital is going to come in. India has always attracted more capital than I've always believed. India has attracted more capital than it ever deserved at any point of time. People were investing in India in 2007 thinking that it's a 2,000 per capita income country when it had a $700 per capita. And today people invest thinking it's a $5,000 per capita company when it's 2,000. But I think that is because there's a lot of wonderful, linkages between US institutions, which are largely responsible for building the private investing business in India and Indians and India. So there's a lot of connect, a lot of trust, and the capital is always flowed, sometimes a bit ahead. And capital by its very nature, flows in fits and starts. But the good news is that capital has been available. So I think these are the three, I would say, forces at work. Capital being available, openness of really smart talent to join companies, and founders with varying backgrounds. It's not the American style startup is a bit different, and the Indian style startup could be a 50-year-old who has spent 20 years in insurance and says, I want to build an insurance company. It could be a 40-year-old who says, I have spent 20 years in pharma, I want to build a pharma company. It could also be the 25-year-old who says, let me go and build something on consumer internet. So the Indian startup entrepreneur is a bit different. He's sometimes, on an average, on median is actually older. In median, he's chasing a much wider menu of opportunities because India is early in the development cycle. And those are big forces at work, which is what make our job quite exciting.
Yeah, that's pretty interesting, VT. Especially forget how it looked when the industry in fact started, and say a 50 million or 100 million was a very big fund to be in the market at that point in time. So taking cue from there, maybe Nilesh, you are also an entrepreneur, started in 2015. How have you seen, from educating entrepreneurs, what venture debt is, how has the quality of founders changed in at least 2015 to pre-COVID, as well as what impacts, say, acquisitions like Flipkart had on the entrepreneur as well as the investing world, seeing from a global perspective?
Thanks, Sahil. VT made some very interesting points. I think, we're seeing a very different breed of founders. Sometimes we are seeing serial entrepreneurs. Yeah, one of the least celebrated, founders in this country is a guy called Super Maheshwari, who built First Cry, and then he built Express Bees, and then now he's building Global Bees, 3 unicorns, all offshoots of the same business. We're seeing founders now coming from very small cities. I recently met a founder who grew up in a village in Rajasthan, is now building something in the rural ecosystem, and probably one of the most talked about, startups. We're seeing now founders, in fact, a couple of Britsians who are building a very exciting startup in Indore. So, we're seeing this momentum of entrepreneurship practically in every major city and every small city in the country. Two, I think last 7 years have been extremely volatile. We had many disruptions thanks to demonetization, GST. We're seeing a startup funding winter. We saw one in 2016. So for people like VT and I, we've seen these cycles, and we don't, we know it just plays out. There's always growth, and then there's always, focus on profits, and then growth and profits. But I think these last 7 years, as investors, we've also grown significantly. Founders have grown, but we've also grown significantly, and just being able to guide, mentor, and coach the next founder as to, in a situation like this, what needs to be done, because we've done it before. So I think that is the other very interesting thing that we are seeing. In terms of an ecosystem, we've come a long way. We just celebrated the 102nd unicorn yesterday. The 101st was a company that, actually I had not heard of until, 1.5 years ago. It's a 2-year-old company called PhysicsWala, that became a unicorn and just came out of nowhere. So you're seeing we think everything has been built out in EdTech, and then there's still another company that can come and disrupt and build something, very unique and create a lot of value for, for investors, and also create a lot of educational outcomes, if you will. So I think the pace of innovation has only exacerbated. The amount of capital that is currently sitting dry powder, as we call it, I don't think we've had so much dry powder. I think VT is sitting on $500 million. We're sitting on $500 million at Trifecta Capital, and so is Akarsh at Elevation. They raised their largest fund. So just, 3 VCs here have about $500 million. So we've never had so much money to back the best founders. But just coming back to the question of venture debt, which is something we had identified as a gap 7 years ago. We've come a long way. It's now an industry. 7 years ago, very few people had heard of venture debt. It was hard explaining to them what it means, why it is useful, why it is important. And I think, we've Trifecta Capital, we now have $1 billion of capital available to be given away as venture debt. So that's massive. We've been doing 35, $40 million venture debt transaction to single companies. So it has come a long way. There are a few other, venture debt firms. And we are also seeing interesting use cases from, 7 years ago, it was runway extension to then it became for working capital, for CapEx. And in the last 15 transactions that we've been involved with, at least half of them have been for acquisitions. So it's and that brings me to the very interesting point you talked about is acquisitions and how they are playing out in the ecosystem. I mean, clearly we didn't have large companies, until a few years ago that there could have been any, any meaningful acquisition. I mean, most of the time we heard acqui-hires. And that's what we saw in the first 3-4 years since we started. But we're now seeing massive acquisitions. You look at what Byju's has done, created a very, very large business, been very acquisitive, ever since. Good Lamb, a very exciting company in beauty cosmetics, has been acquiring a lot of companies. And I think there is, linked to the growth of the startup ecosystem. One, we have seen large companies. We are also now seeing a lot more ambitious founders with much larger vision than we saw 3-4 years ago. I think that has been one big change that I have personally seen. The founders are now thinking very big, and that they obviously have large balance sheets. They have large businesses that they can do. But for any VC ecosystem to have meaningful impact and create wealth, I think M&A is a very integral part of the growth of that ecosystem. In the US, 70% of exits happen via M&A. In India, that was always a big problem. Now, we saw two things last year, which is fundamental and very structural. One, we not only allowed loss-making companies, startups to list, through regulatory changes, but we also now have about 102 unicorns, which have the power to be acquisitive. We have the Amazons, the Flipkarts, the Reliances, the Adanis, the Birlas, the Tatas, who are all now looking to add, exciting startups to their portfolio to grow. So I think overall, the ecosystem is growing beautifully. The US, I think, is 75 years and about $165 billion of capital being invested in a normal year. Forget about last year. India is about $10 to $20 billion. So we're still a very small, young and maturing ecosystem, but I think we've come a long way in just 7 years. So sorry, it was a long answer, but I think there were aspects that I just wanted to cover off.
Right. No, Nilesh, that was right, spot on. And the Flipkart exit, $18 billion back in 2018, and the secondary starting, and then even the Byju's getting bigger, giving $1 billion kind of exits were definitely a needle mover in breeding new age entrepreneurs, because it's a virtuous cycle. And investors also now feeling there is a path at the end of the tunnel also to get an exit. So taking a cue from there, Akash, maybe what has been your journey, especially in the last 4 years? These were years where the horizontal e-commerce and edtech, fintech were largely set, but there was then flushing of new kind of spaces. Bunch of them you have delved deeper into, and then COVID hitting the final kind of nail in the head by expanding the market maybe 10 years ahead in 2-year time frame. So would love to hear your journey. What kind of entrepreneur did you see from your lens over the last 4 years, and the spaces which you have explored at Elevation?
Yeah. Thanks, Sahil, and a pleasure to be here, a privilege to be here, essentially. So, last 4 years, I've spent my time across consumer tech, B2B, both commerce and SaaS. Obviously, Elevation is a sector agnostic sort of a fund, so seen quite a few new sectors coming in. I think one thing that I have learned essentially in the past 4 years is that I don't think any sector is dead at any point. 2016, 2015, 16, everyone thought that e-commerce is done. We have the two largest players, and then Meesho came out of nowhere, and then Meesho scaled really well. Same thing happened with food delivery in 2014-15 when there were a bunch of players who sort of had raised a lot of capital, and then there were two new companies. Zomato had been around, but they were just starting with delivery, and then Swiggy was there. Again, sort of scaled really well, and those are the two surviving food delivery companies today. So that's one learning. I think there are enough access to sort of be able to create a business in any sector that you start with. And obviously, TAM, etc., are a question in a few of those. But I don't think horizontal, where the marketplaces of fintech opportunities are dead in any way. That's one. I think the second big change, the second big sort of theme that I've seen emerging over the past couple of years is that Indian founders sort of thinking global from the get-go. This is truer, and this has evolved because I think partially because of a lot of large companies being in the B2C space, founders have started to focus on the B2B side where you are not as constrained by borders. And there, both whether you think about B2B commerce or you think about SaaS, founders are starting to think global first right from the get-go. Obviously, Freshworks' success and then B2B sort of commerce taking up companies like Zetwork, etc., Zetwork, Electromarket, finding capital and scaling again transactions and showing that there are enough margins in that value chain to be captured. I think were sort of created those cycles. Third, obviously, the new sectors that have emerged. I wouldn't call SaaS new. It's been around for now almost. India SaaS story is now almost a decade old. But the new sectors, whether you think about crypto, Web3, etc., again, are essentially without borders. So from get-go, again, you start thinking about a global product. You have to acquire customers globally. You have to build a product which can stand, let's say, the product which is as efficient as, created by a developer sitting in Ukraine or somewhere in Eastern Europe. And from the design standpoint, is as good as something created in the US. Right? So I think that is a third big change I have seen. On COVID, I think there were, again, 2-3 major changes in my mind. One, in the initial phases of COVID, when no one knew how the capital cycle would play out, and everyone thought that the funding winter is here. Actually, in a lot of our portfolio companies, we saw profitability accelerate. People cut down on a lot of spends, and in a few of our companies, we saw them turning profitable, essentially. But then obviously, what happened on the other side was that because of everything becoming remote, there was virtually no friction to sort of fund a company. Earlier, you would go offline, do a diligence, etc. And now those discussions were happening on Zoom. So that shortened the capital raising cycles. And because of the loose monetary policies, a lot of capital was available. Several global investors started investing in India. Hedge fund sort of became active, and then a lot of capital was available. So because of that, that journey of profitability, I think, to a certain degree, stopped at that point, and companies raised a lot of money ahead of the curve. And now I think sort of the pendulum seems to be swinging back. Let's see where it goes. So that's the thing. I think digital adoption obviously accelerated quite a bit. For B2B companies, it was a boon because whether I think of SaaS, whether I think of commerce, they realized that, okay, the commerce companies realized that an organized company in an otherwise unorganized market probably is able to hold you better and hold supply chains better when such disruptions happen. Second, for SaaS companies, the earlier requirement of having, let's say, a footprint in the US sort of to a certain degree attenuated. So their companies were okay to adopt these tools and accepting these tools, accepting the salesperson remotely, right? And again, this is something that has not gone back even after the market opening up. So that has given us a leg up. Essentially, it has shortened our GTM cycles essentially on the SaaS side. These were the 3-4 things in my mind I think we saw in COVID.
Yeah, I think totally spot on. I think at India Quotient also we backed SMB SaaS, and where the thesis was the same. Okay, lack of global footprint was not even fundable at all, right? But I also see companies in the portfolio scaling up to 10 to 20 million ARR very easily. But going back to the pendulum thing, I think what gave us a lot of smiles, maybe initially when the funding was on gung-ho mode, entrepreneurs thought profitability should be achieved and going on the other side of the pendulum. And now very soon some people are saying this second winters and international VCs coming up with burn rates and all. So VT, you have been on the forefront in this growth versus profitability debate, although the TAM has expanded, right? When says India Quotient portfolio share Chat Sugar are funded, not even 10 million paying users or not even the TAM. Now, at least the debate is whether it's 30 million or 15 million, right? But how do you think the mindset has changed, and what's the way forward, given what we have seen in the listed IPO space and bunch of funding investors taking a backseat for a while?
So I think there are two parts to this. I think one is for the audience, which is, if you're a young person thinking about building your own company, what does it mean for you? And then there is a bunch of things for us, as we think about and have these conversations, right? I think there are two parts to it. One is every winter is different. So we don't know how this is, how long it is going to be. And those are all driven by macro factors, which, honestly, even economists, keep doing one hand and the other hand, right? So very hard to have a view saying, what does this look like? That is one. So I always tell people when they ask, I said, look, every winter is different. You try to draw parallels from other winters, saying, look, as they say, right, if winter is here, spring can't be far behind, but we just don't know how far and when it is coming. The second point I always say is, look, the message for every company in terms of what they need to do is different. So I almost, I would eschew reading broad messages and say, this is what is applicable for every company in every place. It makes no sense. If you're a founder who has product market fit, who's just raised capital, you can't sit and say tomorrow, how do I make sure that my 36-month or 48-month runway becomes 10 years? It just makes no sense, right? This may be you've gotten lucky, you've raised money at the right time, you're sitting on good product market fit, this may be the time to accelerate, right? Versus say, let me cut a few jobs and let me fight. I think the answer for every founder will be different. And there is nuance which is required. And I would say the learning from the last two winters, and this is the maturing of the ecosystem that Nilesh spoke about, is I don't think we are reacting to it the way we reacted, for me personally, 2008, or how I reacted in 2016, because I keep telling my founder, don't read any decks. The message for each one of you is different. You're all in very different places. And therefore, first, there is a reality check saying your availability of capital is harder. It may take longer. If that's the message, what do you need to do? And the answer for each one of you may be very different. Depending on where you are on product market fit, depending on how much runway you have, and depending on your competitor dynamics, because one of the great advantages of lack of funding is that if you're ahead of the curve, you can really press and grow the distance between you and competition. So then you'll be foolish to kind of put all brake slam and say, let me just make sure my runway goes from 4 years to 10 years. It will make no sense. So the second message is nuance. And third is, for the young founders who are trying to be founders, look, this really is of zero relevance. There's literally like the global macro story. You can read, these are intelligent debates to be had. But if you're a founder who really has an idea and wants to start, just go ahead and start. Because the broad environment saying there is an angel ecosystem, there is a Series A ecosystem, there is now a larger ecosystem which exists to kind of shepherd you along, exists, capital is available, and therefore go and build what you want to build, if that's what you want to do. And leave it to these panels to, have conversations on, length and depth and, meaning of the winter. At least that's my, that's my reaction, which I have at least, I don't know whether, I don't have anything more to add.
Right. Nilesh, it would be great to hear your perspective as well. Like, how has your evaluation parameters changed? What would you advise, say, somebody in BIT's fourth year while envisioning right? Like we look up to, say, Sanjay Bikhchandani and all, who really have made free cash flow positive companies. How should they envision, and how has your evaluation framework kind of evolved, at least at current point of time?
Yeah, so I personally think, this momentum of the Indian startup ecosystem is unstoppable. And this is perhaps the best time to start a business. I mean, just imagine when Sachin and Binny were building Flipkart, there was no logistics, there were no payment gateways, there was no trust in e-commerce. So I think they've done the hard work of actually helping build a very large ecosystem on the back of which, many businesses can be built. So actually it is, half the effort to build a business today. So, this probably is the best time, but that said, any time is a good time. And, in India, it is a land of opportunities. You got younger generation. Just imagine. I was just talking to some Japanese friends, and they were telling about their aging population and why, they find it very difficult to adapt to some of these technologies that we are consuming on a regular basis. So we are a young country. Hopefully, we are the only shining light in the global, stage, because we are growing and we expect it to grow. So I would just encourage everybody to, if they want to be an entrepreneur, they should. As it relates to the funding winter, I just think these are cycles, and this is normal. I mean, you go to a wedding, you eat a lot, and then you say, I'm going to, diet for a few days and get back to shape. And I think that's very much imminent in the startup ecosystem. Globally, governments reacted to infusing liquidity to solve for the COVID issues. That liquidity translated into private markets. A lot of it came to India. And clearly that was not meant to be permanent. So, if anybody was thinking this is going to go on forever, I think was clearly mistaken. So a lot of us were already anticipating this. And I think in some sense, this winter, as we call it, and I'm always a optimist. So I do think spring is around the corner and will come when it is due. But this is time for all founders to fix their businesses, to get rid of the noise, to rationalize. Because at the pace at which some of them have been growing, you didn't spend a lot of time. You were still, the leadership was still settling down. The KRAs were still, being developed, and so on and so forth. So I think this is a perfect time to sit back, and we've seen many cycles of this. And the good news is that Indian founders are very receptive, and they're getting excellent advice from VCs saying, "Listen, you need to fix this soon, and just be prepared for the worst case scenario, which could be 2 years, elongated winter." But when you do that, you just end up building stronger and stronger and stronger businesses. I think also, what is happening in the tech companies listed in the stock markets, I think that's also giving good signals to founders and investors saying, listen, long term, this is what is going to work. And so you need to be focused on bottom line. So I think there are two things that have happened. One is this talks of a funding winter, and two is, how public markets have behaved and how they have treated different tech companies differently. I think is also an indication of, what to expect as you build a business. So I think this is, all founders who are, cutting costs, and, I do feel that it has to be done empathetically. It has to be done in a way that the pain is low, but you have to fix it, for the better good.
Right. And wonderful points raised there. And Akash, maybe you can chip in. What are you advising maybe your portfolio companies at this point of time? And again, more importantly, say, what would you advise these young bit folks, just like your classmates of IIT Delhi, Dom? Like, we had zero clue at our point of time. Maybe my roommate went to Flipkart and ended up creating later Rapido, right? I had zero idea that he would do that while playing with him in the undergrad days. So I think your views at both of these points on the current winter scenario, and then on advice to this young audience here on how to select ideas and maybe what to jump on would be very helpful.
Yeah. This is my first winter, so I'm just sort of trying to learn and see and not trying to predict anything. I think just to add to what VT and Nilesh said, I think nuance is probably the most important thing. I think even in our portfolio, and we have a large portfolio, we see companies of all shapes and sizes with at various stages of their funding life cycles, varying stages of sort of cash left in the bank or runway, and for each of them the advice is different. I think a couple of things apart from the funding winter that have changed, I think, and one of these has sort of been around for some time now, with the life sort of returning back to normalcy, at least it seems, with COVID. And with that, the implications on customer acquisition, the transaction sort of friction that is there, I think that's one thing that it will change, and we are seeing sort of evidence of sort of some change, essentially, the implication in sort of customer acquisition costs, etc. We are saying, I think that's another thing apart from the funding winter that we are seeing. Otherwise, I think the advice is pretty consistent, right? If you have money in the bank and if you have PMF, try and scale, right? But probably scale in a manner which is less, I would say, momentum, but more sort of sticky and more sort of cohort driven rather than, let's say, volume driven, if I would say. Second, if you are, let's say, in a place wherein you have 12 months of runway, you should try and go out and raise, essentially. If you can't extend that 12 to 24, there is a survival risk there, right? If you're anywhere in between, I think then the answer becomes a lot more nuanced there, and you then spend time essentially figuring out what the best thing is. For the early stage founders, I don't think anything changes in my mind. There is enough capital within the Indian VC ecosystem to support early stage companies across. We are early stage investors, seed series investors. It's not that our sort of the way we evaluate companies has specifically changed in seed or series A. I think if you think about at these stages, right, seed, series A, essentially, there's enough upside to be captured. I don't think any VC would particularly be concerned about a funding cycle there. So my sense is if the founder today is sort of very confident about the idea, they're very clear they want to do entrepreneurship, and they want to do entrepreneurship not to raise rounds but to sort of create value, then they should start right away. That's what my sort of 2 cents would be. What they should not expect is that, okay, in the past 3-4 years at least, we have seen that companies becoming unicorns and raising large rounds at sort of low revenues or with limited proof points, and those journeys becoming shorter. I think what they should be prepared sort of mentally would be more sort of extended periods of uncertainty, essentially. But that, I think, comes with being a founder. So for early stage founders, if you're confident and you want to create value, just go ahead and start.
Yeah, I think that I also have personally seen at least the kind of pre-seed to seed ecosystem, the initial couple of crores of capital has been solved by the angels, right? That's a very big positive in the ecosystem. Like when ShareChat rate, the first raise was hardly 50 lakh. And so I think that's the beautiful part of the ecosystem. But again, VT, moving back to you, what would you advise, like given capital is there, right? You are getting capital to experiment. But I've seen like bunch of pitches that I receive, most of them would have seen this problems in the edtech space or very consumer basic ideas, which might not be very fundable per se. So what would you advise, say, if you're to these audience, young bits audience, while choosing the spaces they choose to devote a decade of their time?
Yeah. So look, I think only two things I have to say, especially for young founders, right? Obviously, you have to find a space in which you have some interest, a natural passion, because founder journeys are long. While the optics around it, the optics of becoming a unicorn, and media will have you believe that these things happen in 2-3 years. The reality is that for most people, any semblance of success which is recognized by the world could be anywhere between 10 and 15 years, right? So if you're going to do that for such a long time, you jolly well at least need to enjoy it and enjoy the process. Second is, I always tell young founders, money cannot buy you product market fit. Money can buy many things in the world. It can buy you scale, it can help you accelerate, it can help you get talent, but money can't give you PMF. For PMF, in fact, we have seen again and again and again that the time it takes to get the product market fit, some people are lucky, it may be 1-2 years, sometimes it may be 3 years. That is not solved by capital. So spend the time in getting product market fit, understanding what it really means, and you know it when you see it. Eventually when you try, the fact that a consumer is adopting easily, the sales cycle is becoming easy, whether it's a consumer product being B2C or whether it's a B2B product, you can sense it as a founder, and we try to sense it as investors, like saying, hey, PMF hai ki nahi hai, you can get a sense, right? So I think keep your eyes and ears open for that, and that's what I would advise young founders. For the older founders and that right cohort, I think the trick to learn, whether you're a unicorn or whether you need to raise capital is, a bit of what Nilesh and Akash said, which is, look, you have to look at the public market companies, right? And what do? When they need money, they raise the money. They don't bother saying, my valuation last year was so much. Bajaj Finance QIP almost failed in 2008, right? I'm saying that's the irony of capital markets and when you need to raise money, right? So, forget about, so I think one of the things and I think that's a part of the maturing of the ecosystem, which is going to start behaving like a bit like how public market companies behave, which is if you feel you need money, you raise money. You don't care about what it takes. You just make sure you do it because you have to live to survive and thrive, when things become normal. I think that is something to learn. The second thing to learn from public markets, right? I'm saying, look at the top 20 public market companies in India in 1995. I think barely one of them will exist today. So unicorns will churn. That's the nature of capitalism. That's the nature of the Schumpeterish element, right? You'll have 100 unicorns. Some will die. Some will grow. Media will talk about those that grow in good times. Media will talk about those that crash in bad times. Ignore all that noise, because that's the very nature of what we are signing up for. That would be it. Yeah, that would be my 2 bits.
Yeah, great inputs. So Nilesh, what would your advice be, and how do you see the ecosystem evolving on both sides, say, over the next decade?
I think there are opportunities everywhere, and I quoted about an edtech company where we thought everything had been done and it was just hard to build another edtech business, and it got built. So I think there is opportunity everywhere, whether it is education, healthcare, logistics, transportation, food security. There is opportunity just everywhere, because India has a vast population, young population, but broken infrastructure. And so if you really see, we have a lot of tech-enabled businesses, but I think we're beginning to see some green shoots of very exciting deep tech companies. And I would, while VCs also have to train themselves on being able to evaluate companies such as this, I think there are enormous opportunities in just building cutting edge, tech and deep tech companies, whether it is in the area of neural sciences or what have you. I mean, we do have, amongst the brightest, talented people in this country, so there's no reason, and they are the people who are doing all the innovation in the US anyway. I do think, also that, one should generally, look at the competitive landscape, focus on the TAM. I think that's very important, is, how large is the market opportunity, because you want to go after large market opportunities. VCs want you to go after large market opportunities. So, focusing on the TAM, focusing on the competitive intensity, focusing on regulatory environment are some of the things that will help you, identify areas that you want to get involved in. we are seeing, tremendous amount of investments being made and are likely to be made over the next 20, 30, 40 years in clean tech, in renewable energy. I mean, that's an area of opportunity. And we've been scanning the market for the last 2 years. Unfortunately, I've not been able to find, an interesting asset to invest in, just because, perhaps many times we felt, it was technology that was still evolving or could easily be disrupted, and that we did not have, any great, IP over it. But I think there is a lot of, work that's happening on the clean tech side. We are getting a lot of, inbound requests from our investors saying, what are you doing about ESG, as an example? So I think, global allocators of capital now are beginning to focus on ESG. So, that presents, very interesting opportunities. And there's a pool of capital that is waiting to go into ESG opportunities. So, there's just so much, opportunity in India, because we're still a, developing country with significant, I would say, people who are below the poverty line, which have very low access to healthcare, which have low access to education, and so on and so forth. Those opportunities are just, enormous. I think most funds in India remain sector agnostic, and there's enough capital. So to the founders who come with interesting ideas, who show passion, deep interest, are able to convince us that this is a large business to be made, I'm sure we will be open. But like VT very clearly said, I think anything that one decides to do should be driven out of passion, out of some interest, because this is a very, very long journey, and it can get very lonely at times. So it's sexy to be an entrepreneur, but it's a difficult job to sustain it. That said, from a BITS perspective, somebody mentioned BITS Mafia. I think, I believe about 20% of the startup ecosystem is touched by BITS Pilani. It's a very powerful ecosystem. And for BITSians who want to be entrepreneurs, there are just incredible investors out there to help mentor. There are great founders, Swiggy, MPL, Grow. These are all BITSian companies. Zeta, just lots of knowledge there. People who have built very, very large businesses, people who have been building businesses over the last 15 years, have seen many, many winters, have seen many summers. So I think there's a wealth of knowledge, and in that ecosystem, one should leverage, and one should get a lot of guidance, and then decide if what they want to do is the right thing to
do. Right. Maybe leveraging the ecosystem is the right word. And maybe given we are on the fag end of this session, and taking a question from the audience, like open to the panel, have you seen any correlation in the quantum of capital available to the quality of ideas? Does it increase? Is it the other way around, or totally uncorrelated? And any other parting thoughts open to the panel here? Yeah.
Quantum of capital to the quality of ideas. See, I think, again, at least the decision-making, the way it works in our case is, first, instead of the valuation or instead of the quantum, I think the first decision is whether to invest in the idea or not. So quality of idea takes precedence, quality of team takes precedence over the quantum question or the valuation question. And in most such cases, in the early stages, I think the quantum is based on what the founder needs and what the founder feels they need, essentially, to, let's say, for a 12, 18, 24, 36, whichever stage they are in, right, depending on the stage, what kind of runway they are looking at, and what kind of ownership, essentially, the VC needs. And then there are some ambiguous valuation frameworks. I don't think there is a way to value, essentially, specifically. So yes, definitely. I think quality of idea is paramount along with the quality of team. Quantum probably comes secondary.
So great thoughts there. Yeah, a bunch of takeaways. The ecosystem has really matured, and there is no dearth of at least the early stage capital here. Both early stage and late stage founders had their fair bit of learning. But again, it's a very positive outlook going forward. So maybe I'll end it here and request the BITS organizing team to take it from here. And it was a pleasure talking to VT, Nilesh, and Akarsh on this fantastic session. Yeah.
Thank you.
Thank you for the lovely moderation, Sahil, and always a pleasure to be on BITS events.
Thank you.
Pleasure is mine. Yeah. Thanks.
Thank you.
Thank you to all our speakers. And the panel discussion gave us valuable insights into how VC evaluates a startup, what they look at, and how they decide to invest in startups. All four of our panelists are experts in the VC space, and their years of experience was beautifully summarized in this panel discussion. Thank you so much for joining us, Mr. Nilesh, Mr. VT, and Mr. Sahil.
Before we end the first day for the India Portfolio Summit, I would like to add a bit more about Conquest. At Conquest, we are focused on helping early stage and pre-seed startups gain a strong footing in the startup ecosystem through our accelerator program. Over the past 3 years alone, we have catered to 5,500 startups while offering a wealth of resources and networking opportunities. Our accelerator program has 3 key pillars. Number 1, our online mentorship sessions with industry stalwarts, covering all the key elements of growing a startup from 0 to 100. Number 2, our network of investment partners. For this year's edition, it includes Westbridge Capital, 100x VC, Nexus Partners, Bessemer Venture Partners, Rainmatter Capital, and many more. Our third pillar is our resources, worth $100,000 plus for this year's edition, along with our equity less cash prize for our winning startups, which was set at a combined pool of 60 lakhs over the past 2 years.
The grand finale of our accelerator program is set in Bangalore and comprises of the top 10 startups in our cohort moving to Bangalore for a 7-day accelerator program, which provides co-working and co-living space. The finale provides a stage to pitch in front of various stakeholders in the system, investors, industry leaders, media houses, and jury members, with our equity-less grant up for grabs. The registration for Conquest are open till the 14th of June. To register, head over to our website, conquest.org.in, and click on the register button. I repeat, to register, head over to our website, conquest.org.in, and click the register button.
This brings us to the end of the first day of the India Portfolio Summit. We would once again like to thank our guests for their enlightening words and our audience for joining us today. The summit will resume tomorrow at 2 p.m. with an Ask Me Anything session on the marketplace model with Amit Kumar Agarwal, founder and CEO of No Broker. Tomorrow's schedule is packed with industry stalwarts such as Ajit Balakrishnan, co-founder and CEO at Zepto, Manish Pandey from Joe Stocks, Harsh Jain, co-founder and CEO of Grow, Vibhor Jain, COO ONDC, and many others.
We hope to see you again tomorrow. Till then, on behalf of Team Conquest, have a good night.